Welcome to the show. Good morning, all the way from London. Chris Beecham joins me early here in the hot seat in a very exciting start to the week when the Middle East crisis has worsened. What were you up to at the weekend, very quickly? Because I woke up to images being sent to me from the Middle East.
I hadn't gone to bed. This is the second time it's happened, because when Israel first struck, I was just about to go to bed and then the news came through, so I stayed up. And then again, I was on the cusp of going to bed. I saw the Trump post, the way they announced it, which is in itself is crazy.
Yeah.
This was announced through social media and then obviously the official release. But yes, I was still up to watch it come through, so I was up for another hour. Yeah, digesting the initial impact.
I had gone to bed early because I thought I'm going to catch up on the long week with Tasty here. I'm sure all of you saw that on the Twitter on Friday, on my Twitter, and also saw the updates that we had here on the show. Good morning to you, David Boise, morning, and Julian. So great seeing you. I hope you did make full use of Rich's credit card and Tom's credit card at the bar because there were free beers. It was a very hot Friday. Gavin Ackers as well. Good morning. Avon on the list today, and Wing It saying good morning from sunny Milan. Looking forward to the get together tonight. Wing It, you're in for a treat, especially with volatility hitting the roof at the moment. Andrew McKelvey, good morning as well. Really upset that you, disappointed rather, that you weren't there at the event on Friday. Positive business announcement from ITM Avon and Plus should lift their share prices today, in his opinion. Thank you so much for chiming in, Monkey Man, as well. Morning, you apes. That's you, Chris.
Sorry.
All right. Right, so let's just catch up on some of the big moves. You were messaging me at the weekend about oil, so let's start with that.
Yes, but the funny thing about this, or the funny thing in the inverted commas, is that almost the lack of reaction. Yes, oil prices are pushing further towards $80, as you'd expect, because of the surprise of this move, but it hasn't gone any further. If you look at equity markets, they're down a little bit, but they're certainly well off the lows. And then oil prices, yes, moving in that direction. But if there's nothing that results from this, then maybe you don't get much more of a reaction. I think it's very much all to, if I say all to play for, you understand the meaning of that we don't quite know what the reaction will be. But there are discussions over whether Iran will do anything at all.
So far they've kept mum, haven't they? They haven't.
So far they've kept mum. There's a lot of comment, and again, this is sort of macro tourism analysis of the worst kind. But there was a thing yesterday where the Iranian Parliament voted to close the Straits of Hormuz, but the Parliament, of course, purely advisory. They can't.
Yes, they can't do it unilaterally.
No, it has to go to the Iranian security equivalent of the Security Council, essentially. So there's no official word of that. And because so much oil that goes through the Hormuz goes to China, so if you close that off, you are going to get a very angry phone call.
Oh, angry customer, yes.
Very, very angry customer, not a happy bunny if that were to happen.
Yeah.
So it's not the sort of slam dunk response that people assumed would happen.
No, and I think Hormuz is the key. So I have made a special graphic for our trader friends here.
Oh, look at you.
Yeah. And yeah, as you rightly say, China is going to be not a happy customer. Neither will some of the top Asian destinations, India, Japan, South Korea as well. And not to mention, all the other Middle Eastern, buddies that have to get their oil. There's no other way. There's no other way except to get it through the Strait of Hormuz, which is a critical choke point. Some almost a third of global oil supply has to pass out of this. And I just looked at some very high level numbers. These numbers crunch from a variety of sources, including Bloomberg and Reuters as well. Just very high level there. 84% passes through here to go to Asia. 38% comes from Saudi Arabia. So the oil that passes through here, the energy that passes through here, 38% from Saudi Arabia. Can you imagine Saudi Arabia getting very angry? Am I not right in also saying, I was trying to look up a lot of historical, you're very good at history, that the Strait of Hormuz has never actually been closed.
No.
Yes.
No, this has always been the threat. And
That's right.
It's hung over for decades of don't strike Iran because this will happen. Where's your figure for closure risk? What's that based off?
So the closure risk it's always been...
is that your careful model?
The model based on data from a variety of sources, including EMEA, including IAEA, including Bloomberg and Reuters as well. So some of the things that have happened in the past is, there's great talk about mines. There's great talk of lobbing of missiles to stop oil tankers from even proceeding. And any hint of that or a choking off of that area is enough, right? Is enough to cause...
You don't even have to close it, really. I've already seen shipping costs have gone up over the last couple of weeks because of the potential risk. And you've seen this with, obviously, the Houthis and the Red Sea. So.
Yeah, well, we're going to go coming up right after this. But if you like a map, trader friends, of
just like a map.
Oh, I love a map. Love a map. There's a really good one which I've just got up here right now, and that just to show you how important this is, because it's 20% of the world's oil passes through the strait, and that, I think at its widest point is it 33 kilometers?
Not very wide at all.
No.
It's so easy to close these waterways if you wanted to, although given that you've got so much Western hardware, and indeed the Gulf navies as well are prepared for this, so it's not as if there would be any countermeasures. So we'll see what happens. Really.
Yeah. And on that note, let's get to coming up. Right, Chris, take us through the coming up.
We're going up with overnight action, all straight away, and then 8 o'clock, the opening bell. We'll see what's moving on the open in London. Not a busy morning from RNSs, however, so we'll see what else moves.
Well, thankfully, because there's plenty moving.
And then we are a special moment live from Milan, which apparently involves me.
Yes.
Being rich.
I did send you the rota on the weekend.
I don't redo emails. I have to interview the jammy so-and-so that's gone all the way to Milan.
I know, right? And then after that, after the event, he then stays for the rest of the week.
Yes,
Jolly.
it's a tough life, really.
Tough, it's really tough. Wait till you see the pictures from the dinners over there.
Yeah, so, and then 8:35, normality reasserts itself, as it always does, and Angeline and Matt return to discuss markets. And then 9 o'clock, all sessions.
Yes.
Stocks.
With me.
And then 9:10, investing experiences. Who have you got? Is Dylan related to the poet Terence Ratigan? I always think I see his name, or is it not?
I don't think so. Although Dylan can be very poetic.
You could ask him.
Ask him. Last week,
Yeah, I'll just interview him. I'd see
Yeah. You can stay, Chris. Don't go away.
And it's 9:35. It's Chris Beecham. No, it's Axel Rudolph, as ever, with Trade of the Week. Thankfully, I'm not subbing in for that. He was away on Friday, so he's returned. I'll find out where he's been over the weekend.
Any idea what his trade of the week is?
No, everyone always asks me. Nobody ever. He never tells me. It's this closely guarded secret. It's like I don't know what it's like actually. That metaphor just failed on entry there. Sorry.
Right. On that note, we're going to go straight into overnight action. This is a very, very quick sting. So don't go away. Stay with us. It's just going to be a sting. Yeah. Here we go. Hey, trader friends, welcome back to the show, and what a day it is for those of you that have been watching this over the weekend. The Middle East crisis worsened after we saw the U.S. enter the fray, the U.S. entering Israel's war against Iran over the weekend, launching strikes against 3 nuclear sites in Fordo, Isfahan, and Natanz as well. I woke up, I don't know about you guys, let us know on the chat here whether you caught it the evening before like Chris, or like me, you woke up to those images. And right now we're waiting on news from Iran and also some more news on whether or not the Strait of Hormuz is going to be in any way affected. So let's just take you through some of the overnight action, taking a look at, first of all, CNBC's front page, talking about why global markets seem to be brushing off the US strikes on Iran. Chris, we talked about this earlier on. It was like a bit like a precursor to, what happens next. Markets seem to be oil still higher, but not as high as expected. The weekend, you sent me that image saying that at the moment looking 80, but it didn't get to 80. No,
the IG weekend markets came into their own as ever with that kind of thing. You did see some overnight weakness in the futures and then in a strength in oil prices, but it hasn't really followed through. I think this is almost the dog that hasn't barked for this, really. what is the Iranian response? The US, of course, was at pains to say and had communicated to Iran apparently that this was a one and done moment. This was that was it. If there was no other response, then they would also not take any further action. So there's sort of a compelling reason for Iran not to do anything else. But you do argue that maybe national pride. I know the Iranian president spoke to the French president over the weekend and said, well, if it was you, what would you do? So there are possibilities, and the markets should still be aware that there is this the potential for this. But if you're looking at oil, if you're looking at the VIX, looking at stocks, it's just a bit of a shrug of the shoulders, really, at the moment. And that's perhaps the key thing here.
Do you buy the whole, lots of industry watchers talking about $100 a barrel oil if the Strait of Hormuz is disrupted or closed?
Yeah, if is always the key thing here. And remember the predictions about how high oil would go in the wake of the Ukraine conflict, and that proved to be incorrect. I think we talked about this almost a week ago. In fact, exactly a week ago, really. If you look at where oil was in January, look at where it is now. Yes, it's back there, and it is higher than it was a week ago because of these unexpected events. But now this is priced in. We have to wait and see what happens. And if you're OPEC as well, you'll be looking at that and thinking, well, oil is now $10 a barrel higher than it was 2 weeks ago. If we were to increase production, this would be a good time to do it. And they could sell it as a service to the global economy. It would probably win them a lot of brownie points with the US as well to bring down oil prices to keep things in check. We have got the Fed chairman speaking this week, so he might have a bit of a comment on how oil prices are faring and how that will begin to factor into calculations.
Cool. MST Marquis Sol Kavonik saying oil price shock similar to levels seen in 2022 following Russia's invasion of Ukraine. Maturin, look at the amount of talent and insight that we have on Trade Live with IG. Maturin saying I was on the first Royal Navy ship to do the Gulf Patrol Straits of Hormuz back in 1980. And here we are again. Maturin, maybe you can let us know because, any insight on, helpful hints as to whether there's going to be disruption, because I know the Iranian parliament has approved a move to close it, but as Chris rightly said, this does not mean it will be closed because this is just they're just advisory.
It's a recommendation, if you like. That's what we should do. So they can sort of say it sounds good, it's worth a few headlines, worth a couple of dollars on the crude price.
Yeah,
but they have to follow through.
Yeah. Also, CGJB001, that doesn't really roll off the tongue. You might want to get a handle that's a bit easier. Is that their customer number?
That's me.
That's you!
Live engaging with everyone.
Why have you got such a terrible handle?
Well, I didn't make it for this. I've been in there long before.
What is C?
It's the middle names. I've got two middle names.
Oh, I see. What is G?
Oh, well, you have to do a poll for the middle names.
Oh, right.
Guess. There you go.
So have we got that poll up, producer Phil? We've got a poll as well. Fantastic. It is up. Please put in your poll, because we're going to reveal this after in a few moments. Taking a look elsewhere to just coming off my screen now, but moving over to elsewhere, because we are also getting loads and loads of similar sort of comments. But Bloomberg is focusing more on Trump doubling down on monumental damage done underground in the Iran strikes. Do you think he's doubling down because he's not sure whether or not they actually, did the damage intended?
Well, if you look at the satellite photos, it looks like there's plenty of concrete dust floating around those sites. But the reports are now that there were some Iranian trucks seen leaving these facilities on Friday, and that they may have been carrying some elements to other places. And even over the weekend, US officials saying we don't actually know where all of this stuff is now. So there'll be a hunt is on now for that as well.
Interestingly enough, we could see potentially more on this, because isn't there a press conference later this afternoon? I think I watched on the news at the weekend, there was this expectation that there was going to be a big announcement later today for them to update the world's press as to, whether or not it has been a success and they've hit those targets or not. For those of you that enjoyed my guest, Joachim Clement from Pan Neo Liberum, who has extensive experience covering this sort of market reaction to this sort of geopolitics. He sent out a note early this morning, which I am getting to you right now. 10 to 20% downside in terms of market downside if Iran closes the Straits of Hormuz.
In stocks? 10-20% downside in stock?
No, he says, I'm just reading, trying to summarize this for you. In terms of stock markets, initial correction of stock markets of 5 to 10%. 5 to 10%. Whether or not, this is according to Joachim, this correction lasts longer and becomes deeper depends on how the trade war unfolds in the next couple of weeks. Meanwhile, if the Straits of Hormuz is shut, we expect a major stagflationary shock similar to 2022. In this case, so this is where the 10 to 20% correction comes into play.
Right.
In this case, if there's a major stagflationary shock similar to 2022, then in this case, a 10 to 20% correction seems likely. Right, the poll, I saw that flick up earlier on, producer. It's still going on. Please put in your comments. We'd love to know if you are one of our clients. Indeed, I met many at the event on Friday, or if you are thinking about it, or tell us who you're with, if not with us, and what we can do to get you to come over. Kirky, away from our numbers. Hey Neil, how are you? Good to see you on Friday. Neil saying, Kirky, unfortunately, I feel the UN has once again proved to be of no deterrent to geopolitical agendas. Chris, your thoughts on the UN?
On the UN, world's greatest talking shop. Pointless.
No teeth.
No teeth. The Iranians will make a noise, but with the US on Security Council, there's nothing they can do, really, I think. So it will allow for further displays of what's the word? Outrage and shock. But apart from that, not much else really. Yeah.
And pushing your view to the top front page of Reuters, they're going with a different angle here. They're going with, looking out for the Iranian response after this weekend's excitement. World awaiting Iranian response after the US hits US nuclear sites. Do you think Iran's just going to be quiet and twiddle with the Straits of Hormuz, or do you think they will respond? I think it's like a Chris Beach and crystal ball question.
Yes, they have a high risk of response. I think also that there's also attacks on US installations throughout the region. Iran really beating the drum for retaliation, but you can't be blasé about this, but you have to say that they've been beating the drum on retaliation against Israel, and it has very much not delivered in terms of a response. Now, we shouldn't assume that is essentially not going to happen. But that's why the market, I think, has been so calm, is that they've seen the past week and the lack of a response. Iran has so far shot down 4 Israeli drones and nothing else.
I mean, it's clear that, we're on a knife's edge here, but whether or not it worsens or not is still...
It will be obvious with hindsight. At this point, there are so many possibilities. If you'd said a year ago that Israel would attack Iran and within days they would establish essentially unfettered ability to attack any site in the country, people would have said that was mad and limited response. But that's what has happened so far. And that's why the market reaction has been so calm in stocks. Oil prices obviously continue to move higher. Looking to compare to where we were in 2022 with the Ukraine, that there was the $80 level we were in January, and then by May we were at 116.
Let's come off my screen. Yep.
There is,
and bring oil up.
At the moment, we could be in the early innings of something more sustained move higher. So it will take time to emerge. Maybe oil was too low, around $60 for US crude a couple of months ago. Certainly we've seen a bit of a bounce, but it very much depends on where OPEC goes from here, whether it takes, as I say, this opportunity to just turn on the taps to maintain market share, to just take advantage of these higher prices. Because that's what they've been aiming for, is higher prices on a sustained basis for oil, and this appears to be what they're getting at the moment.
Let's just take a look at the daily chart oil here, and you hear technicians talk about the looking at swing levels, and if you are looking to go long, there is that swing level there at 72. Just taking a look at also the gold price, because interestingly enough, gold is now 0.4% lower. Yeah. So, this is kind of, chiming in with what Chris was saying just now. Is it a case of if the Straits of Hormuz stays open, we're going to be okay? If it doesn't, then we're going to see, a further move into safe havens.
Yeah. So you can only trade the prices in front of you, but you do actually see this sharp reversal in gold that's telling you something there that people aren't immediately rushing for a further safe haven here. Dollar yen's higher, VIX is off the highs of 22 we saw overnight. 22 or so has been about the ceiling for VIX on the IG platform, really, on the blended VIX product we have, 22 and a half over the past couple of weeks. So it's not really mimicking the reaction we saw to the tariff announcements back in April. Of course, this does take tariffs off. Again, just pushes them further out. It's almost as if the administration has given up on tariffs and doesn't really care, which is the perception I've had for about 3 weeks, is that they've decided, do you know what, we're not so bothered about tariffs. It's not really gone very well, I think.
We'll create another diversion so we can
exactly.
talk about something else.
Troops into LA, Iran attack.
Yes.
All this works to move attention on from the uncharitable explanation would be the failure of their tariff policy.
Yeah, and speaking of that, just highlighting this, trader friends, about what we're talking about, just going over to the options front as well, and just showing you, you saw the VIX earlier on, which I put up, and you saw that, the handle there still around the 22, and also look at the US 500. I mean, take a look at that. It's still, at the 20 level. We're not seeing a huge spike in vol there, implied volatility. Even going out to next week, it's still around the 20 level. I'm sure Matt Arbour is going to bang on about this when he comes on in just a moment. Meanwhile, if you want to come off my screen, just want to also talk about scenarios. So the other scenario is, what if the Straits is blocked? Maturin, any insight onto, flags, what you look out for? I have made a chart, a handy chart, to try and illustrate this easily for you guys. And I'm going to try and get it up here, if I may. The winners and the losers, how many minutes they open? 8 minutes? 8 minutes, do you think? Yeah. So I'm going to bring this across. And let's have a look here. So the likely winners and losers, right? European stock impact. Energy
you've been busy this morning.
I have been busy. I came in early, and I
don't get this with Rich. I don't get whizzy charts and things.
Oh, well, this is the added value. I hope Rich is listening. This is the added value. I have to say that there was a tree that crashed onto the tracks, and then I had to get an Uber in. Because there is no Rich. Rich is in Milan, so the Ong has to be in, because it's do or die.
Hands on deck.
Or it'll be Chris Beecham with a wig on.
Me talking to myself again.
Let's have a look at this. I'll go through the likely winners, and Chris will go through the likely losers. So, likely winners, oil companies. Obviously, you saw that last week already. The big ones, especially ExxonMobil and Chevron in the US, and likely winners in Europe would be Shell, probably Total. Defense contractors, your BAE, your Rheinmetall, those especially that have. You keep hearing me say this over and over again. The links to drone technology, anti-drone technology, they are the ones that are likely to move. Chris, take us through the likely losers.
So what we have airlines, IAG, Lufthansa, Wizz Air, EasyJet, Finnair, I'm trying to read these, North Atlantic, all of these. Of course, airlines have priced out this stuff well in advance, but you might see it further down the line, of course, if you do see a disruption to flights as well. It's a key thing to bear in mind. And then travel and leisure, unsurprisingly. Carnival, TUI, Thomas Cook, Dart, all, if you get weaker consumer confidence, if you're worried about this stuff, then yes, you'd expect to be reflected in bookings. And then, unsurprisingly as well, cars. Is it the third time I've said unsurprisingly? I think so.
Yeah,
sorry.
It's only 7:54.
Ferrari, Porsche, you can keep account of these things. I can't read that last one, Valeo.
Yes.
It's too far away. We need a bigger board. We need a bigger board.
We need a bigger board. People, if you like and subscribe, you can get us a bigger screen, which means you get a bigger board that Chris and I can see. So let's have a look at like and subscribe, because if all this information is really useful and we love bringing it to you, please like and subscribe so we can do more of this. we are going to guess the chart next, and there is a price involved. Jesse 14, have you received your price yet? Is it a US or a European stock, producer Phil? That didn't sound very confident. He says he
No,
thinks.
I think it's the US. Yeah. I think it's not a word we want.
It is the US. Okay, great. And it's CFD. Here we go. Guess this stock. Two more minutes to the opening bell, and we are up for a huge mega session given all the things that happened the weekend. And also for those of you just joining in, we're looking out towards the reaction after the US joined in on Israel's war against Iran and launched those attacks, Operation Midnight Hammer. Before that, let's get across who the winner is for Guess the Chart. It is Boise. Well done, you. You beat all of us here, well, except for producer Phil.
Yeah.
In the gallery.
A very poor stock price.
Yes, indeed.
Listed at 148 back in 22. IPO price was $68 a share, to be fair, and then started at 146. So it obviously opened high on the day, but it hasn't really gone anywhere in the last 4.5 years.
And also Airbnb coming under fire after quite a few, shall we say, scandals and settling out of court for some of them.
All these European countries not keen on
Yes.
tourism as well.
Yes, and in Southeast Asia, there are lots of places that have signs up now that say in apartment blocks, no Airbnb allowed, and in the contracts as well. Right, 10 seconds to go. You got the bell?
I have got a bell.
Right, well done, Boise. Right, we are looking at the reaction after the US launched Operation Midnight Hammer, which struck Iran's nuclear facility. Here we go. Right, charts up, just having a look across the board. We were looking out for a weaker session there, and we have it. Germany 40 down 0.5% there. FTSE also down 0.33%. Chris, what are you seeing on your screens?
Yes, just futures weaker, obviously compared to Friday's close, but clawing their way off the lows, and that's the key thing to bear in mind.
Yeah, they are coming back, aren't they?
Old FTSE 100. Now you think the FTSE 100 would do all right because if oil prices are higher, it pushes BP and Shell higher. That should be interesting. Keep an eye on those two names around the open, particularly. Very strong session actually. Just to go back, Chinese stocks Hang Seng at 1%. So really, they're not worrying about the close of the Straits of Hormuz.
No, you're right. And also paying attention to some of the airlines. I think I messaged you this morning. Like some of them were lower over in Asia, but then they came back. They came back after that.
It's a shrug of the shoulders, Jen.
Yeah. Let's take a look elsewhere and looking very. Just having a look there. Right, this is the FTSE there. Why did I hear Dylan in my ear, Phil? Right, here we are. I'm going to...
BP and Shell, 1.5% for BP, Shell 1.2% higher. So both those seeing a little bit of positive action on the open as the BP clawing its way higher after, well, not been a bad couple of months for BP from the April lows. Shell a lot better though.
And trader friends, I like this. You're seeing correspond with the chart that I made for everyone. So BAE Systems also up 0.2% there.
Company is going to be good because the assumption is this will lead to more defence spending. NATO talking about touching 5% and to defence and other elements. So really, really going for the defence spending angle.
Let's take a look at the red side of things. We talked about airlines earlier. Of course, the longer haul ones will be hit most, but the smaller, cheaper budget airlines are also feeling the pain. EasyJet down more than 2% there. IAG down more than 2%, Andrew McKelvey. And also we're seeing a lot of the defensive stocks as well lower there. Reckitt Benckies are down 8% there. Hikma is down more than 1%. Any big ones that pop out at you, Chris?
Interesting to see. Well, because there's no RNSs really of note this morning, so we're not really going on much in terms of corporate news flow. But otherwise, Entain down 1%, continuing a bit of weakness after last week's bounce. National Grid, always a bit of a safe haven, not seem to be participating in that. And utilities both down quite a bit. United Utilities as well down this morning. Otherwise, not much to say, really. Yeah,
let's take a look at Germany right now, crossing over to Germany. And we are checking in on the losers list first for you. Some reinsurers there down. Bayer also down 1% there. And we've got Siemens Energy down 0.8%. Mercedes-Benz, the car makers, also lower. Chris?
Sorry? I'm trying to do something else for acting.
Oh, I see. We have. I thought you were gesturing at me.
Just keep going.
Rheinmetall also down. We talked about this earlier. Rheinmetall, interesting, also down 8% there. Let's have a look on the other screen there. We've got not a lot of gainers. Not sure why Total is there. I have to take that out of my watch list. But Commerzbank is up slightly, but not by much. Mostly, it's a red day across the board there in terms of the losers list. Volkswagen also down 0.33%, as well as SAP there. Crossing over to the FX space, just looking at the dollar first, because the dollar basket there, if I put that in my full screen there, it has come off a little down, about 0.1% there. Much of the reactions, this daily chart there, as easing right now. You heard Chris and I talk about, this kind of respite, this pause for breath as the world waits on either Iran or waits to see what happens with the Strait of Hormuz, this closure threat there. The investors' nerves are on a knife edge there. Looking elsewhere in the forex space, taking a look at euro dollar as well. That is easing off slightly too, and still trading in that 115, 114 space. And euro, that's the euro dollar. Let's take a look at cable right now, because that's probably a bit more.
It's a touch.
Yeah.
It's not, but this is not a market at all that's screaming panic.
No, it's not.
Dollar's unchanged. Gold is, where's gold? Gold is down. Oil's up a little bit as you expect. Stocks a little bit weaker, but this is not screaming full-on panic. It may change if Iran retaliates.
Yes.
Because then we would expect US response, then we're back into this tit for tat kind of thing.
Yeah.
But at the moment, this is something that the market is taking in its stride. It's yet another weekend event where the market has shrugged its shoulders and said, okay, we can live with this.
Yeah, and on balance, it looks like they're saying, let's hang on a minute, guys. We are going to wait and see to find out what happens with Iran and the Straits of Hormuz. That's what volatility is also implying. If you look at on the option side of things.
As Bloomberg's commodity editor says, it benefits Iran to talk about it, get some low-rank officials to go out and say we're going to think about closing it, push up the oil price. But what they actually wouldn't do is close, because that will bring the US down on your head. And as I say, angry phone calls from China as well, which you really don't need.
Yeah. Now, if Iran does disrupt Hormuz and the shipping that goes through there, then Commonwealth Bank, including many others, sees Brent hitting around $100 a barrel. But this is a big if. A lot of ifs and coulds and mays here still for the market. Right, let's have a quick look as well at some of the watch lists here. Let's have a look quickly to the drones makers, if we can. Just have a look whether there's any move there. Also looking at some of the defensives as well. And it seems like it's all kind of wait and see. EU and other defense stocks, having a look at that as well. Also not huge reaction there. It'll be interesting when we get closer to all sessions to see whether or not there are big moves higher or lower there. But at the moment, it seems that even on the indices, Chris, we're seeing those losses come back. It's giving back some of those losses.
Yeah, very much some futures just really pairing those overnight gains. In fact, if you look where we opened last night and where we are now, steady recovery. The Dow opened, sorry, the S&P opened down to 59.15. Where are we now? 59.60. It's very much a buy the dip. I think, who is it said, is it Rothschild said, buy on the sound of cannons, sell on the sound of trumpets, I think is the phrase. I'm sure someone
heard that
watching
one.
at home will know that. Yes, I think that's the idea, is that, again, if everyone panics on this kind of thing, it tends not to lead to anything.
So buy on the sound of
Cannon,
and sell on the sound of
trumpets. I'm going to Google that, but someone else who I do.
Twitter friends, if you guys know the person that said that, please let us know.
Oh, it is Rothschild. Yeah, sorry, there we go.
Come off my chart because I want to show you something quite useful. Right, we got a poll. Please, if you have not yet hit the poll saying either yes, I do you trade, invest with the IG platform, or I am considering it, or no, I prefer another provider, please let us know. I would like to know, and so would producer Phil and Sophie and everyone here too, because it's great to know who we're speaking with and how you trade and what you trade, because that just helps us serve you a bit better. Let's have a look at a really cool chart here. As I try and zoom in for you, this is the source is Kepler, and it's from Pan-Euro-Librum, and it's just a snapshot of the kind of global trade that goes through. This is if, I'm showing this to you because if we have a any sort of hint even of disruption there, it's not just oil and fuel and gas. It's a load of other things. We've got minerals, we've got fertilizer, we've got chemicals, we've got cement. Not as big obviously as energy, but still loads of other things could be disrupted as well. Right, come off that chart, and we are now going to take a look at some of the comments that come through. Eric Jones, good morning to you. Gas is $2.72 in Boston. That's so cheap.
What's that in proper money?
Makes me want to cry. It's just really cheap.
Is it?
They have...
This is the key thing, US presidents, isn't it? The price of gas is the most important thing. If that goes up, Trump has to worry. So.
And also it varies state to state. Am I right, Eric Jones? It varies state to state. So that's not it's not cheapest. I think it's even cheaper in Texas and places like that.
You just dig it out of the ground yourself.
Friar Tuck saying perhaps China and Russia have done their cost benefit. Not many positives in doing it. Well, China is not.
Well, the Russians have no air defense systems to give because they've been used in Ukraine. The ones they did give Iran have been picked off by Israel. So there's. Would you like to buy more secondhand stuff that doesn't really work? No, I think we'll be all right. Thank you. So there were reports that China had flown in some. There were 2 Chinese aircraft that flew into Tehran last week. So we don't know what they were carrying. But at the moment, it doesn't look like there's any kind of sustained air bridge at the moment.
Did you see that other story at the weekend saying that if we do see this spike in fuel prices, then it could really, really disrupt the AI play because they need energy to keep all those
these big data centers going.
GPUs cool.
Yes.
Right, because not everyone can put them under ice and underwater.
No.
They have to be in the jungles of Vietnam, being kept cool by one man and a dog.
Everything is connected as ever, so we'll see how that goes, really.
Right. Andrew McKilvey saying, big shout out for the IG back office. They dealt with the GGP consolidation Friday afternoon whilst 3 competitors still working out. Thank you so much. Good applause there. We try and give you the edge and positive skew, especially when we can. Eric Jones saying, yes, lots of taxes in different US states. Right. Just talking about usefulness, let's have a look at some of the other movers. We got Rich dialing in any moment now from Milan because, of course, tonight is the big live trading options event after the one in London. Tonight is the one in Milan. So if you hop on that plane, trader friends, you can still make it. Not so much for Avi Fine in Tel Aviv. Hope you are being safe over there. But his flight was disrupted, so you couldn't make it to London on Friday. Right, so just taking a look at Munich Ray for you because lots of things coming through on the headlines right now. Just checking and trying to filter that for you because whilst I've been talking about Avi Fine, it's been slightly buried there. So Munich Ray shares down 1.6% after Morgan Stanley cut it to underweight from equal weight. Chris, any others call out at you?
I hadn't seen any interesting ones actually this morning.
Let's have a look. I'm getting my
Swiss Re was cut by Morgan Stanley as well, so insurers not having a good start to the week.
Giving you a big bar there if you're looking at a giant mover there. Yeah.
Cement, isn't it? The construction.
Very good. I love you. You're very good.
I'm trying to think of a cement pun. Crumbling.
Chris, Beachy had some insight into most stocks that most people have not heard of. It never fails to amaze me.
Everyone's heard of Whole. Even I've heard of Whole.
Some people have not. What is it? The other day we were talking about diploma, and someone messaged me and said, "Is that to do with education?"
Yeah.
You know, lots and lots of these stocks that are, you know, really it's shares like really moving there. If you know, trader friends, let us know. Right, Rich is itching to go on, I hear, all the way from Milan. So we are going to have him right after this quick break. But don't go away because I will be back. I'm going to go over and drag Matt Arbour here by the heels because he is going to update us on why volatility is so low and what that means for the rest of this week. So stay right there. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Welcome back, everybody, and a special treat for you this morning, live from, where are you, Rich?
I'm somewhere over the seas in the Milan, Chris.
Splendid. Why are you in Milan? Tell us why you're in Milan.
Well, as if you don't know already, come on.
Nobody tells me anything around here.
We had a wonderful time on Friday evening. Saturday, we were straight onto that aeroplane, so across here. And this very evening, Mr. Beecham, we have our live show to about 300 Italians, and I'm told that 80% of them don't speak any English. So Sosnoff has been practicing his Italian. He's actually on the Italian CNBC, much like yourself, likes a bit of moonlighting as well. He's on the Italian CNBC right now as we speak.
How exciting. Have you been translating all your options terminology into Italian? Can you tell us what a strangle is in Italian? Is that
It's going to be an interesting one. We have a translator.
I'll take that as a no, then, actually.
And the translator isn't any old translator. He's actually an ex-world ice skater. So he's very famous across here. So a lot of people are also coming to see him. But if you think of your kind of dancing on ice star, he is the Italian star.
How exciting. Oh, gosh. And have you had a good weekend in Milan?
It's been wonderful. Woke up to 20 notifications yesterday to ruin my Sunday morning of
didn't we all?
Our orange friend.
And what have you been seeing? What have you been seeing in Milan over the weekend?
Well, yeah, so Saturday evening, well, Dylan Ratigan's been fantastic. I think you've got him on the show later. He took us out for pizza. Him, Sosnoff, and myself had a really nice lunch yesterday, long afternoon, eating pizza, as you should do, in the middle of Milan. And then this was the, this was the dinner last night. So you can see here, I got sat next to Ratigan. On the right-hand side, next to Sosnoff, on his left, that is Andrea. That's our ice skating champion. And then right at the back, that is two guys that work for IG Milan. And then Brittany, that organizes everything, and her husband. So you can see that pasta there was absolutely incredible. It tasted a little bit like carbonara, but it was just made with cheese and pepper.
Okay.
And that was our, there it is.
Oh, fantastic.
Oh, it was fantastic.
What about the cultural elements? What have you been seeing? Anything?
So yeah, the cathedral. Got tickets to go in and see the cathedral tomorrow. the Duomo, and then also off to see the Last Supper at the Leonardo Museum. So that'll be tomorrow as well. Now, a little bit of shopping, perhaps, Chris. You can't go to Milan without shopping.
No, you've got to go, really, haven't you? Tell us what about markets? What's your view? What happens now? Come on.
Well, it's a real, like, I saw your poll there. You know, who's an IG client? Of course, I had to hit the yes button, seeing as that's my real job as a client. So I think it's worth joining just to get the weekend markets. A lot of people were asking me on TikTok at the weekend how I knew what the US futures were. The weekend it's closed, it's not open. Well, it's open on IG. You can trade oil up 8%, and I most definitely did. The three of us sat at dinner last night, and oil should not have been up 8%. It was ridiculous. So I think that was a layup trade to pay for our Milanese food last night. So we shorted some oil.
So you think oil goes back down from here?
Well, I don't think it's $80 anyway.
No, fair. I think I agree with you on that one.
We talked for weeks beforehand that, look, oil's really stuck at that $67 level without anything big happening. Now, I'm not underplaying what's happened. You know, that was particularly concerning that he's gone ahead and do it. And like I was watching you and Ange earlier, I would be nervous being a holder of the S&P at 5,960, just waiting for the next headline. So I think still a de-risking is appropriate. I think the FTSE's a great place to be. You know, if you've got 11% of the index is BP and Shell, and then another 3% British Aerospace, another 4% British American Tobacco and Imperial Tobacco. I mean, that's what you want to be owning in a potential Middle East conflict. I don't think it's priced into BP or Shell. So I think FTSE shows its incredible defensiveness in this kind of situation. I would not want to be long the Nasdaq or the S&P at those kind of levels.
But so far, it's not exactly a volatile start to the week, is it? You've got the VIX that's
Well,
dropping
this is
back
the thing,
down. Let's not dismiss it entirely, but it's not as if markets are particularly exercised in early trading, are they, really?
Yeah, but a lot of market players these days just do not understand risk. The complacency is off the charts. I mean, it's absolutely incredible because every time something happens, you're either saved by the central bank or you're saved by Mr. Taco or the market's flooded with liquidity. So I don't think we've been in this situation. When was the last time the US attacked somebody like Iran?
Well, the closest parallels you might have, if you look at maybe, I think the FT this morning was talking about looking at when it attacked with the initial attack on Afghanistan 2001, you got Iraq 2003, and then Libya in 2011. The short-term market reaction was mixed, I think, at best.
But Libya and Afghanistan, I don't think
well, there's
they're
no
comparable,
comparison in that sense. But then you can argue that the past week you've seen Israel, this sustained air campaign, if they've partly neutered a lot of the Iranian response, and the message from Washington to Tehran has been, this was a one-off, if you don't strike back, because they know what happens. They know how this plays out.
But he's 87 years old, Chris. I mean, you know, his whole life has been dedicated to death to America. I don't think he just sits back and takes.
But we talk about
dropping.
potential, and Trump talk about regime change or this kind of thing. But then there's a risk of, if you do push them too much further, then there will be a much bigger response, and that could put the regime itself in danger. So the argument might be for, even now, might be for caution. I think we should underestimate the potential for nothing to happen in terms of a response, because they have to talk about it. We talk about Straits of Hormuz. They might talk about closing it, but where they actually close it is another matter.
But how can nothing be a response?
Well, if you know the response to your response gets even worse, that's, I think, where you have to price in what can you do? And look at the past week, what the Iranian attacks on Israel have been limited at best in terms of their response.
But he can't stay in power, Chris. If he does nothing and just accepts, then his his rule over the people's gone.
Well, it is if you certainly respond and then the Americans respond and start taking all your military bases apart even more than the Israelis have done. The risk then is that the regime looks undermined in a different way. There's probably a no good outcome at this point for them. That's
as soon as Trump came out and said unconditional surrender, then there's no good outcome from it. But
well, yeah.
What I don't think there is an 87-year-old supreme leader turning around and accepting embarrassment and shame in front of his people and his whole life's work destroyed in a bombing raid on a Saturday night.
Well, we have to see, because certainly the market's just not going with that response at the moment, is it? Now, it could be being far too blasé about this. We could be in a very different place. They close the straits, oil goes to 80 and beyond, then it's in a very different world, isn't it?
Yeah, people seem to be particularly focused on that, but an attack on the US base in Baghdad, if that's the headline, then they've cleared it out. They've given it as a freebie. They've said, look, we've got nobody there. You're not going to kill any US soldiers. Attack us, and that's your option for a response. And we haven't had it yet. So I think that's interesting.
No. Well, it's now more than 24 hours. How many hours has it been? 24, plus 6, so 30 hours. No response forthcoming as of yet. You might argue that the command and control has been degraded. They don't have the ability to respond quite in the way they'd like as well. I think these things take time to organise. And then there was reports that maybe militias in Iraq could be attacking, and they were being lent on by the Iraqi government not to attack. So there are a lot of moving parts in this situation, aren't there?
Yeah, absolutely. And not to mention Hamas and Hezbollah, you've got for somebody that's meant to be the state sponsor of terrorism for the last 15 years, do they turn around and have no response?
Well,
I certainly wouldn't be putting risk on here, waiting for that headline.
Well, it's a limit, I think, because what you've seen in Israel is essentially dismantled that over the past 2 years of action. Hamas, Hezbollah put firmly back in its place with some pinpoint attacks. The pager attack, if you remember that from, was it a year ago when Israel launched those? So that kind of thing
Incredible
shows you that,
part of espionage,
the stuff they can do. And it's a clear message to Hezbollah, don't get involved. Because
this goes back to if you think they're really that weakened, then the regime doesn't stand a chance.
Maybe it
gets
anyway.
overturned.
Maybe that's what I mean. If there's no response,
so what does that
no
look
way
like,
out.
Chris? What does a regime change in Iran look like?
Well,
in 12 months?
I think obviously the worry is if you get regime change, you don't know what happens afterwards. If it's an internal uprising, it could be a different situation. It could dissolve into a much more unpleasant situation in Iran itself, with potential repercussions for the rest of the region. But this is the thing, if the message from America is your government can't really defend you anyway, then you would expect maybe some elements within Iran to be looking at ways they can topple the government. The sad thing, of course, they've risen before and got nothing for it. So there might be less appetite now, even with the regime's ability to control the situation being degraded.
Yeah. Now, talking about dictatorships, what do you think of this being done without Congress approval?
Well, I know there are a few congressmen saying that you can't do this. This is outside the boundaries, but he controls both houses of Congress. So you can argue that even if it comes to a vote, there will be very little impact from it. But it's again another sign of the way Trump continues to sort of just circle around the limits of what you can and can't do with the Constitution, and you just wonder at some point, when does the patience snap? Because a lot of people are prepared to back him on this and argue that it was a necessary move. But it does look like a violation technically of presidential powers. But that's not really bothered him before, has it?
Yeah. So the next trade, I mean, Bitcoin was interesting. I noticed somebody mentioned the risk-off element of Bitcoin. I think it must have dropped 4%, over 4%.
Yeah, we were down at 98, weren't we, overnight, I think. So it's a little bit of skittishness.
So I think that was a rather obvious trade. As soon as you saw the futures only open down 0.5% rather than the 1.4 they were predicted, then Bitcoin was still at 98,600. So there's those real mismatches with gold up 1% and Bitcoin down 4%. You're really making your play on, right, is it a risk off or is it a flight to safety.
Yeah.
So which one am I going to go? Ethereum was down 9, I think.
Yeah.
You know, Ethereum's much more of a risk trade rather than Bitcoin
it is.
is.
But what you see with Bitcoin is a lot of support coming through around that 100K mark. So as ever, the big round number, it's always fascinating to watch markets around big round numbers. There's definitely a bit of strength coming through. People are prepared to buy there. Or I missed it when it went through 100K. Oh, it's come back again. Now I'll buy it. So there's that psychology element really coming into play there for Bitcoin. And behaving mostly in line with how stocks are behaving, actually. So you've had a bit of weakness and then the recovery overnight. So the patterns have been very similar for both assets.
Well, shouldn't it be back to where it was then? That's an interesting. Why is it 2% lower when everything else is
maybe
within 15 bips?
Maybe it's a different element coming into play in terms of the uptrend. You had a big. It's such a strong bounce for Bitcoin over the past couple of months. Just not really seeing the news flow. Maybe the flows have dried up in the short term. We'll wait and see, really. Yeah. And Powell speaks this week as well, so that's another one to bear in mind. I think he's got testimony on Wednesday, Thursday, so that's key.
I'll be quizzed there. Talking about testimony, we do have a great trading show tonight. We're going to be up there, and thank you to all of you who came along on Friday. That was really great to meet people. Here was some of the trades that were done. So I think it was 39 trades in just over an hour. And you could see there was, we made a bit of money. I think we were up about $500, $600. Made some money on First Solar. We traded pretty much all the Mag 7. We traded a bit of short oil, which was looking a bit, Sosnoff wasn't best pleased last night, but he said we'll certainly be trading it again tonight. And then, a bit of a pairs trade on long Russell 2000 against short S&P and NASDAQ. So really good nights, certainly full of action. There we are. It was certainly a warm one. I had to give fans out at one stage. It was so warm in there. Producer Phil was an absolute gent. He actually went and got us all iced waters, and I took them and gave them to the guys on stage.
Yeah, so sound like he had a good day. Oh, there he is. There's producer Phil doing his thing.
There's.
Oh.
Big shout out. Yeah, which one's producer Phil? The ones with the big arms or?
Take your pick at this point.
But it was really great to see anybody. We had Julian there. We had Pelican there. And away from the numbers, it was, a whole heap of our friends of the show came along, and it was, really nice to see everybody again.
Excellent. And you all made the flight on time. That's the key thing.
And the flight was easy one. And, really short flight, actually. I didn't,
It's just a hop to Milan, isn't it? Good. Oh, I think is that our time up, studio? Oh, there we go. Well, have a fantastic evening. Enjoy your enforced stay in Milan.
Isn't it terrible?
We feel for you. And I think we're live next with Angeline and, of course, Matt Arbour. So see you then.
Do you want me to come back tomorrow, Chris?
Do you know, you asked the studio. They never tell me anything anyway, so it'd be a surprise.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends. Somehow or another, the gallery have decided they'd rather have all of your beautiful hair on. Did you see that? It came on, it was just you.
Well, that seems appropriate. That seems appropriate to me.
Very appropriate.
Well done, the gallery.
On a day like this.
Finally seen it.
Is that what you're doing? Talking to them, handing them a £50 note? Is that?
Oh yes, yeah. Greeting the gallery, greeting the gallery's palms. Morning, Ange. How are you this morning?
I am good. How are you? Good to see you.
Yeah, good. Kind of surprised to see a benign response in
Benign. Volatility
once again.
still low. Implied volatility low once again. Our market's just shrugging it off.
Well, yeah, Europe sort of doesn't really care, but the fact that even the price of crude,
Yeah, we
know,
talked about
that's,
this morning.
the spike last night, but not a lot there really when Europe's come in. There's no panic in the market at all.
No panic. And also, what's interesting too is that they could look at the indices we opened as trader friends. You were with me to open that, and they were looking lower. They were all in the red really, but look at it now. It has since come back, and we are flat to higher.
Yeah. Germany, UK, just really no response at all.
Yeah. All this talk about, US involvement, those pictures at the weekend, right, should heighten risk aversion, but markets are actually telling a different story.
And these are on the back of quite strong up moves, certainly in Europe on Friday, going into those closes. It's an interesting one.
Do you think that this is a message, the fact that, equity markets remain so resilient that, this is supportive of the whole, we're still risk on?
It very much so. It's almost as if investors have had so many close shaves with geopolitical events that haven't resulted in negative moves. There's got to be something really firm to make them become risk off.
MSCI World Equity Index only roughly 16 points below a record high. And in a time when war would usually, might I add, trader friends, boost, the US dollar. Let's have a look at that. It's
US
really...
dollar was stronger, wasn't it? The dollar
but
was
look,
still
it's come
strong,
off as well.
Yes, it's come back.
Yeah. So where do we sit now? Let's have a look at the option side of things, because we were talking about this morning, and I said that it looks as if nothing else happens from now, we keep calm, carry on, and markets go its merry way. But it seems like, but if something happens in the Strait of Hormuz, then
well, that would be the expectation. That there's not really that huge uptick in volatility at the money on the US is slightly higher than it was at the start of last week, but not a we're at war. Higher kind of level.
I mean, look, it's if not, it's fallen back.
Yeah, we're less than 20% at the money, which is yes, okay. We were tending down towards sort of low teens middle of last week, but this is not a market that is fearful of action.
No.
Possibly it's telling us something that maybe investors believe that the world has moved away from reliance on oil, which is, of course isn't actually the case. But that we're not talking the 70s here, where there's a huge oil price shock, and that this is, you know, this is the fundamental shock to an economy that it could have been then. But it's still a very, very real thing, and it's very real for the consumer.
We got some comments coming in thick and fast. I'll wait for the numbers. Neil saying, Rich, with you expect the response won't come by the usual combat routes. Worrying. And a person, loving that handle, a person. You're new to the chat. Good morning to you. In the States, investors are not that scared if Iran will retaliate. Those of you that haven't just yet, just please hit the like and subscribe button. And also, if you haven't already, do you want to read out the poll that we had earlier this morning?
Do you trade invest with the IG platform? Yes, I do, 67%. It's a strange question, that. I'm considering it 20%, and no, I prefer another provider, 12%. I don't know why we asked that question. There we go.
Those of you that do trade with us and were with us on Friday night, and I met up with you, thank you so much for coming. I will be showing those pictures a bit later on. A person saying, good morning. This whole sort of shrugging off, right, by the markets, also coming in an interesting time, because for all the trepidation, for all the, fear that was talked about when we had that big, beautiful budget bill as well, about the US, right, the gaping fiscal deficit, that also seems to have kind of gone away.
Well, yeah. Fiscal deficits are always being forgotten, aren't they?
Yeah.
Particularly in the US. Yeah, it is a strange sort of semi-world where markets are shrugging everything off. I wonder, talk about retaliation, what form retaliation takes. You know, I hesitate to think and talk about such things, but if retaliation were to happen on US soil in a kind of terror attack, what kind of reaction we see there?
Yeah. We got a person asking if Tasty Trade, does that count as the IG platform?
It's an interesting question.
That is an interesting question. I hear another poll. I hear another, right. Let's, the producer Phil says, no more polls. We're going to move on. So what
I was going to say we have seen, I suppose at the individual name level, that the usual offenders, the airlines are slightly lower, but not hugely. Oil stocks tick slightly higher, haven't they? But nothing that one would really suggest is out of the ordinary here.
No wild moves.
No.
Having a look at IAG as well, because that was lower earlier on.
Yeah, who suspended flights, didn't they, as well? They were stopped flying to...
Yeah, even then it's come back off now. It's just down 1% there. And also taking a look at, we saw EasyJet just now, which was lower, but Ryanair also... also easing back off now, just down.
But just 1%. These are not the kind of moves that one might have thought. Certainly on Saturday morning, waking up and seeing,
Did you see it? Because I had a horrific because I think Chris had was awake long enough. It was a long week last week, as you all know, with the Tom Sosnoff and Bat here. And so producer Phil, myself and Rich, we had 3 consecutive days of like late nights after very early mornings. So I was going to bed really early at the weekend. Chris checked prior to going to bed and saw that this is happening. I woke up to images being sent from my friends in the Middle East. Plumes of smoke, and not something you want to wake up to. No. But that was the start of my morning. But yes, and Iran and Israel still exchanging strikes this Monday. So tensions still remain high. I mean, don't get me wrong, this is a very, very serious situation, trader friends. But what we're talking about here, Matt and I, is the fact that we are seeing, almost like a lack of volatility here. Bucking the mood though, oil and gas.
Yeah.
Right. So let's have a look at that. So Shell, and this in part is probably boosting the FTSE as well.
But still not the kind of moves that one possibly would have hoped for or would have thought for if you're
it certainly isn't as big a move as the tariff tantrum in April.
Yeah.
So vol at that time when I was looking, it was like 30 at one point. So BP.
And whatever happens, I suppose the price of oil, higher oil prices, inflationary. These are still not great things at the macro level. This is not what anyone wants to see, I suppose, apart from Jerome Powell to say that he's right still, that he's the man who is seeing the economic shocks and has his steady arm on the tiller.
Yeah, and take a look at that now, trader friends. US Tech 100 is now up 0.25%. You know, Wall Street's in the black now. And so is, well, Germany 40 almost
near as, it's surprising. Yeah, and as I say, that was on the back of Germany 30 was up, what, 300 points on Friday on optimism that there weren't going to be any strikes. So it's sort of slightly perverse, but that's, you know, that all these things provide opportunities for traders. There's you know, the differences in opinion. When you're scratching your head about something, often that is where the opportunity arises.
Some interesting ones this morning, trader friends, if you know the reason for it, because I can't seem to find a reason yet. Do you like chocolate?
I like chocolates.
Oh, good. I love chocolate too. You a milk chocolate or dark chocolate kind of guy?
I do like a sort of Lindt, sort of 70% kind of dark, that kind of.
Oh, very
taste.
posh. Very posh. Well, buy Kaibu, which is pretty much in every bit of chocolate, whether it's the stuff that you buy in the shops in your WH Smith or in...
WH Smiths? Who's buying chocolate in WH? Who's shopping in WH Smith?
I get suckered into the,
Good
you know,
Lord.
just before a flight or just before, you know...
Like at the airport.
Yeah, you know, you wander in there and then I don't get suckered by all the, you know, merch and whatever, or the magazines, or I get suckered in by the chocolates. I know it's an expensive place to buy it, but, you know, it's just something that I do. Buy Kaibu shares down 2.5% there. So I don't seem to see a reason yet, but let me know. Interesting too, given that it's down by so much, because in good times and bad times, people still need to eat chocolate.
So stocks buy chocolate.
Yep, sell stocks buy chocolate. HelloFresh is the other one that is moving a great deal, down 2.3% and now 2.2%. Let's add that to the workspace there. HelloFresh, of course, the one that sells those boxes. And I can't yet see what is behind this move, but it is down more than 2% there. Trader friends, if you know, please let us know. Even gold is substantiating or supporting that lack of volatility, lack of, no one seems to be running to the exit.
No. That's, I think it's sort of the tail end of Rich's chat there, sort of crypto, and suggested there was a bit of a risk off sort of towards the end of the trade on Sunday, but that's bounced back a bit. Like the Bitcoin came back off 100,000, but it's stabilized again. So there's nothing really. It is interesting. It's an interesting reaction.
And for those of you looking for some movers, also just want to show you Novo Nordisk there, because I hope we've got Ronnie Eggnog watching, because he likes Novo. It's down more than 2% at the moment after its updates on some of its drugs at its 2025 ADA meeting. So that is quite a big move this morning for Novo. It's coming back up right now. But yeah, it's a really interesting day, because, you know, I woke up super early thinking that it was going to be all over the place.
Yep.
And actually, it's now feeling more and more like an average day.
Very much so. Very much so. Yeah, I suppose you got some US PMIs this afternoon, although the Eurozone PMIs, which are often good for a bit of volatility in euro dollar, didn't really kick anything in earlier. So it's sun's out. People are not trading. That's it.
Tell us, trader friends, do you trade more or less when the weather is good? We would love to know right here, because, you know, maybe there is a point in
well,
that.
it's always the assumption, isn't it, as you move into the holiday season, that trading lessens, markets get thinner, markets certainly get thinner.
Lull.
The summer lull, which often results in the sort of larger shock we've, you know, the past. God knows how many summers there has been a large market move, an unexpected market move, perhaps triggered by liquidity rather than macro events. But it's always the not get lulled into the vol being lower in the summer months. You know, we all remember August the 5th last year, which of course was you missed out that whole day. Nothing had happened. Markets were off sharply and finished unchanged. But these kind of moves can happen.
Yeah.
When people aren't trading as they appear not to be at the moment.
Yeah, it's interesting to see, because then you think, what is it going to take for markets to really price in a huge amount of volatility? Even the tariff talk, Chris and I were talking about this, even the tariff talk seems to have disappeared, kicked into the long grass. Now everyone's just watching Iran and that's it. But
when's the 90 day? When's the timer?
It's not.
It's
not
next
too
week.
far. Yeah, it's not too far. It's not too far at all. And here we are. And it seems like the world is now just interested in Iran, and also prior to that,
but not interested in Iran.
They're not interested. The markets are not interested in Iran. Speaking of which, we talked about Straits of Hormuz quite a lot, and also the impact on oil, obviously, and energy. But taking a look at the metals space predominantly, aluminium seems to be outperforming copper on energy cost concerns at the moment amid these tensions.
Aluminium is the most energy intensive one there, so
yeah,
riddle me that.
Yeah, I mean, it's just so weird. It's so strange. Elsewhere, we also have a week when we've got some key data points coming through. Which one is the top one for you?
You put me on the spot. I'm not going to have my full week's list now. Show me the list, and I'll give you the reprise.
I think we've got one of Beachy Head's favourites, which I'm being sarcastic here because he doesn't like it.
Bring it up on the platform, Ange.
Do we have the slide from last Friday? Otherwise, I'm just going to...
Just bring up economic calendar on the platform. It's there.
I'm just going to read it out. No, then you have to kind of go through every single one. But here.
You can select. You can use your toggling.
Next
just
7
put it onto
days.
US and then high.
It is already on high.
You just only high. Select only high and then US. Learn how to use your radio buttons.
I've got the...
Okay, the PCE. Yay. No, you can't ignore the PCE.
I bought you time, producer Phil. There we are. Yeah, it is the PCE. The one that Chris hates.
Well, yeah, it fades in and out of fashion. This is either everything or nothing.
Yeah.
I think sitting after, I don't know which testimony that is for Powell. Like these very much vary in importance, but that should be the dominant there. Although his tenure. He's got about a year left, doesn't he, on his tenure? Strange behaviour I read in across the bond futures across. I think it's April to May, or it might be May to June, where everybody is trading on Powell going and the new guy coming in instantly cutting rates in June.
Didn't Trump say that he should head the Fed at one point?
Cronyism, I'm sure, will be involved.
System Pro FX chiming in, saying the markets do not need a bloodbath. And also, this is a morning bounce. Monkey Man saying dark chocolate. Used to love dark chocolate bounty. Oh, I do like that as well. Especially the ones that come in doubles.
I like the bounty, though.
You don't like bounty? You don't like coconut?
No.
Yeah, the dark one is good. Pelican is back. Good morning, Pelican. Pelican was one of those at the event on...
Met in person.
Yeah.
Never
amazing stuff. Pelican also talking a huge amount. You should come on, Pelican, talking about how he trades momentum and how options is a revelation, right? And now he would like to do it full time if he can. Pelican has got extensive experience in construction, trader friends. So if you need any of that good stuff done, please contact Pelican. Steve Davies, good morning to you, saying poor old JP.
Yeah.
Back in the unwanted firing line. I don't think he ever left the firing line.
No, I think JP lives with it every day, and he's...
Yeah. Maturin there, saying, hi everyone, if you'd like to join the other 40 trader friends on our Discord group. Maturin, I think I need to collect royalties on the trader friends. They've called it trader friends. Please, which is my handle. Please send me a friend invite, Matu03, and I will send you a link. Thank you very much, Maturin. They're very civilized, they are. They don't comment when the show's on. And the moment the show's off, they then...
Okay.
Thank you everyone for being civilized. Producer Phil also says thank you.
If I like that, now we're post the summer solstice. Of course, it's all downhill now in the UK. Daylight just
Don't
diminishing.
say that. Please don't say that. I love the sun. I love the sun. Taking a look elsewhere, we also had Spectrus jumping earlier on, approving Britain's biggest takeover after investors proved Britain's biggest takeover this year. We also, I mentioned earlier, Holcim. Holcim was down a huge amount earlier. Let's have a look at this right now. Still down 42% after completing the Almirez spin-off. I hope I've said that right. But elsewhere, it is looking...
it's struggling for stories on a morning. Well, I didn't think that would be the case. This is very much the case.
Indicative of what we're seeing on the markets at the moment. But really, just a reminder, trader friends, after the strikes and potentially those, you might have woken up to those pictures like me over in Iran, and 3, not 1, not 2, but 3 places were striked. I'm going to try and not mutilate the names. They were the Iran's nuclear facilities at Fordo, Natanz, and Isfahan. They were struck after the US launched the Operation Midnight Hammer. But as you can see here,
Midnight Hammer. Where do we get these names?
Take us through the reaction so far. We've seen now Germany 40 tipping into positive territory.
Well, yeah, completely in positive territory. And yeah, as I say, that's kind of the stranger one, because its move was so positive on Friday on the thought that there weren't going to be strikes. Yeah, obviously Friday we had expiry day. A lot of these indices, the expiries were close to highs, close to day highs. Certainly we saw that on the US. Everything came back off following the expiries of June contracts. So possibly less surprising that after that sort of expiry sell off and a bit of a bounce there back towards, like S&P back towards the 6,000. Obviously the expiry was above 6,000. But yeah, it's Europe, which has oil dependency and geographical proximity. It is a strange reaction.
Yeah, strange reaction indeed. And we are going to head to opening bell. Obviously, I'd love for you to this for all sessions. I'd love for you to stay, but I know you're a very busy man.
Very busy man.
Yes, he is a very busy man. And so we have all sessions next, and Dylan Ratigan all the way from Milan. So do get coffee, but keep this on. Go and get your toast and come back on, because we will also be showing some pictures from Friday night. We're from our trader friends. All right. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks.
Always trade within your means and never risk more than you can afford to lose.
Hey, trader friends, welcome to All Sessions. We count you down to this space. How many seconds have we got to go? 10 seconds, and I've got the bell right here. This is where you can take a position ahead of the US Open. Here we go. 1. And we are off. Trader friends, let's have a look at how it's shaking out. European markets and US markets, at least the futures, are all edging into positive territory. And just taking a look at the all sessions as well, because what we are seeing here is monumental. As you heard Matt Arbour and Chris Beecham and I talking earlier on, what is essentially a risk off day has become risk on, and we're seeing markets, relatively shrug off what we've seen so far. Just taking you through the winners list first. We've got Tilray up at the very top, up almost 3% there. But we also have Tesla up 1.4%. Monkey Man, Neo also up more than 1%. Beyond Meat, that one's really volatile. So, bear in mind if you trade that, and it has been on the down for quite some time. ExxonMobil up 1%. No surprise there, given that we've had a lot of the oil majors gain on the scenes that we were greeted with at the weekend when the US struck Iran's nuclear facilities. JD.com also up high, 0.8% there, and Hims and Hers up 0.5%. Switching gear to the losers list, we got Nova Nordisk there. This might the move there down more than 3%. This is all sessions, might be down to that ADA update that it had. So look up for that. We've also got Riot Blockchain down 1.5%, and also IonQ and MicroStrategy down there. It has to be said that we're seeing extreme moves in Bitcoin and Ethereum as well. So if you're trading that space, do put your gloves on, trader friends. Elsewhere on the losers list, we've got Merck and Co. down 0.25%, and Coinbase is also down 0.2%. But really, just checking out some of the commodities for you. We are seeing relative calm here. Oil is now flat. This is WTI. And we're seeing it trade at that 73 level, $73 level. And in terms of Brent, a similar picture there as well. It has since come off what we saw earlier. Also, gold showing us that it is easing off, and we are seeing this rapid ahead further into safe havens like gold there. In fact, what we're seeing is a bit of a mild correction there as markets await more information from Iran, which has kept quiet so far, and also the US, because we are looking out for details and update as to whether or not they managed to really disarm those nuclear facilities as they had hoped. Lots of aerial pictures, but no confirmation just yet. Right, we are going to get Dylan Ratigan on the line very soon. Tell me, producer Phil, how we got him on the line just yet. Oh, he's here, amazing. Let's get him on the line right after this quick break. Any questions for Dylan? Slam them right here, and don't forget to hit the like and subscribe button, because then we can do more of this cool stuff for you and bring you live in the moment moves on the market.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey. with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader friends, welcome to the show, and we are joined by Dylan Ratigan, all the way from Milan. How are you, Dylan?
Never better, never better. Nice to see you. Good morning. How are you?
Good morning. I bet never better. We saw earlier on the pictures of that amazing restaurant and the pasta. When
You know, a little cacio e pepe never made anybody unhappy.
What?
Can I just make one other comment
Yeah.
before we get started?
yeah, go on.
I would just like to say good morning to all of our trader friends. Good morning, trader friends. It's nice to see you.
Dylan has asked me a
yeah.
really interesting
I-
question. He asked, do you have any trader friends who are not friends? And actually, the honest question is no, because they are such a wonderful bunch. They're all friends because they do come to our events to see us.
They are legitimate friends. We're going to see a bunch of trader friends tonight at the event in Milan, I do believe.
Yeah, amazing. Give us a roll call of what's happening later today.
Well, it's already happening. The festivities have already begun. Tom Sosnoff, as we speak, is with Andrea Vetturi, who's one of the greatest figure skaters in Italian history, and who's also one of the biggest tasty traders in the world. He runs a huge trading group here in Milan. And so Andrea has arranged for Tom to be a guest on CNBC Italy. And so they are in the studio at CNBC Italy as we speak, helping people understand the tasty methodology and the tasty sort of logic. A lot of folks, I think, really come to this with an idea of trading as a purely directional action where it's an opinion of what will go up or what will go down. And I think that what Tom teaches, which is really important around both risk management and also the ability to sell options and sell options premium as a way to add a second component of return without being so dependent on directionality. I think that's it's sort of the next level of trading. And I'm hopeful that as many people as possible get a chance to learn from it and enjoy it, and obviously they did in London last week, and hopefully they will as well tonight in Milan at the big event. And then the big event is tonight, 6 p.m. Local time. Doors open at 5 p.m. So here at a venue called Fabrique, which is a nice location just on the eastern side of town. So Tom's over doing TV now, and then we're all heading out to Fabrique this afternoon.
Nice.
To welcome the Italian and non-Italian trader friends.
And how many are you expecting?
It looks like it'll be somewhere 300 to 400 folks, which is a nice group. I don't think it's as big as the London groups or some of the American groups, but I think for our first time in Italy, it is a more than honorable showing. I wished Tom the Italian catchphrase for good luck, which is in culla della balena. So when the Italians are wishing you luck, they say in culla della balena, which it literally translates into in the ass of the whale, which is a peculiar way to wish someone luck.
Yeah.
I understand, but I mean it is what it is. And so if you're looking to sort of get on the Italian bandwagon and you want to wish a friend good luck with a little Italian flair, don't be afraid to just toss off a little in culla della balena if you're wishing well for a trader friend, as I am for Tom this morning over at CNBC.
Incredible. And just to highlight, we have trader friends from London flying into Milan because they are watching the show right now, and they've said that this morning, which is fantastic. Make sure you corner Dylan, you corner Rich and Tom as well. Take a photo of them. So this is what I mean. We met a load of our clients there, and please continue telling us what you want, because that is the best thing for us. And also I'm going to try and get some of the other pictures. Phil was a legend because he was at the door with me, and he was getting people to sign up to Trade Live with IG. Those that don't already watch us, his technique was unbelievable. He kept on saying, yeah, everyone said, but I've already checked in with Angela. Like, yeah, that's not the real thing. You have to sign up here. We're not letting you in. Which please like and subscribe here if you enjoyed the event. Here's another one of our trader friends who watches us every morning. Call out to see that lots more females this time round compared to last year. That's a view of the stage, trader friends. Thank you so much for braving the heat, because if you thought it was hot outside, it was even hotter in that venue. But boy, was it worth it. Here's producer Phil, myself, and another one of our trader friends who watches the show. You know who you are. And here, Adam Deleuze also came to the event in a full-blown suit. Well done you, because it was really hot. But yeah, everyone loving the directional, as you rightly say, directional way of trading, which gives us an added edge on the market. Right, let's come off those pictures now. What is the first thing you will be doing and showing our trader friends when you open up the show today, Dylan?
Well, I think the first thing to understand is everybody sort of gets so keyed up on the technical aspects of it and also the financial aspects of it, which is obviously the heart of the beast. And I'll let Rich and Tom handle that. But I think that there's another layer of this that is really, really useful, even if you don't trade big and even if you don't trade that successfully, which is if you trade at all, which I really think is something that everyone should do, even on a tiny account. It is that the only way you can really understand risk is if you are at risk.
Yeah.
And what I think people underestimate is that they think that risk exists as a very explicit thing that's in the financial world, but they don't integrate the idea that your whole life is a risk.
Totally.
And that being a live human,
breathing is risk.
If you're alive, you're in an at-risk condition. And the mistake when you're in an at-risk condition is to try to either deny that you're in an at-risk condition, one, or to try to avoid it and say, I'm not at risk. And it's because both of those put you in a position where you have no control over the risk that you have. Whereas when you understand that you're in an at-risk condition at all times, you also then are much better qualified to then seize opportunity, whether it's financial opportunity or whether it's life opportunity, because every place that risk exists, risk is a red flag that shows you the green flag of opportunity. And if you understand how to manage risk, then you also understand how to manage opportunity. And I think that what you learn in the specifics of the technicality and the financial part of trading is something that actually philosophically can help with all life decisions in recognizing risk and managing that risk, and then also using that risk as an identifier of where the opportunity exists in your life outside of the financial world. And I think that is an overlooked component of this entire experience. And I'm going to try to emphasize that when we talk this evening. So I'll kick things off with a bit more of a philosophical discussion about life, and then we'll get into the weeds with the live trading with Rich and Andrea and Tom.
And that is such a great thing to kind of teach the audience too, because most people come at this and they almost like fear risk, right? But it's about understanding it, understanding the mechanics, and also not being afraid of it. And speaking of strategies, I just want to revisit the strategy that we talked about last week. You love oil, short it, dollar, buy it, bond, buy it. And have you called your mom?
Call your mother.
Have you called your mom?
Call your mom. You always got to call your mom. So, you got to first you put your trades on. You got to get short the oil. You got to get long the dollar and the bond. And then after you do those three things, then you got to call your mom. And then you just got to wait for the money to come flying in. And then when you get the money, you should probably buy your mom a present.
And the oil short definitely working there. Also wanting to pick your brains on the current status of markets, because, earlier on at the weekend, everyone must have woken up and saw those pictures and thought, oh dear, it's going to be a bloodbath, right? On Monday, what's going to happen. But actually, essentially, if you held fire and just traded the fact or watched the fact unfold, we're seeing the markets shrug all that off, at least right now. I mean, take a look at that, Dylan. It's not only shrugging off, but we've come from opening slightly in the red to neutral, and now we are seeing markets. I mean, the Germany 40 is now up 0.1%. FTSE also higher. Not a surprise there, given we've got BPs and Shells. What do you make of all this?
I mean, this is all the more validation, I think, of my argument to be short oil. The market is extremely comfortable with the level of conflict, even with the U.S. intervention over the weekend. The market does not believe anything that is substantially disruptive to the global economy or to the global energy markets is at risk in the context of the conflict environment that exists right now between the United States, Iran, Israel, and any other sort of allies in that area. It's obviously extremely kinetic right now and tragic. Tragic for the human beings that are in Iran, tragic for the human beings that are in Israel, tragic for all the people that are exposed to it, all of whom, in my view, outside of the governments of these countries, are entirely innocent and largely good people. And so the good news, I would say, in a horrible news environment, is the market's comfort with the risk that exists. If the market was concerned that this was going to spiral into a substantially murderous war, it would not be this comfortable. And so I do believe that the market is saying that it believes that this will remain extremely targeted, extremely limited in scope, and will not spiral into sort of all the catastrophic fantasies that are available to all of us when we read these headlines about, well, what about this, and what about this, and escalation, this, and this, and this. I believe that the market's behavior provides a great degree of comfort relative to its perception or what it's communicating about the probability of a truly catastrophic spiral. And then coming back to the financial side of it, it's very much the basis of my logic in arguing for that oil short over and over and over again.
So where is the Dylan red flag? Is it when the Strait of Hormuz has issues just whacking this up right now? This is what I came in early this morning to crunch up for you, all you trader friends. You know, is the red flag where if we have disruptions on the strait, or is it Iran coming out saying it's going to do something?
No.
What is the red flag for you?
No, for me, the red flag would be when an Iranian ally, Pakistan, maybe Russia, enters into the theater in a way that then delivers an attack on critical Western resources.
Right.
You know, and so obviously the Straits of Hormuz has been a decades-long source of fear-mongering and all the things. I believe that the Iranian regime is going to focus all of its retaliation on Israel. I believe they're going to do that for two reasons. One, I believe they think that that's the only safe retaliation that they can execute without inviting substantial
aggression,
escalation from Western powers. And so if you're sitting in the Iranian war room and your choice is to bring in an ally, Pakistan or Russia, and uncork something on substantial Western resources, whatever that may be, military bases or Western cities for that matter, or the Straits of Hormuz, then that is lights out for everybody on the other side. Whereas if they focus their retaliation on the aerial bombardment of Israel, they already know that is sort of that there's a tolerance for that in the West that doesn't invite substantial escalation. And I do believe that the most likely outcome here is a continuation of as much aerial bombardment as they can muster out of Iran towards Israel. Israel's doing, by all reports, an extremely effective job of neutralizing Iran's ability to really do that pretty quickly. But the thing, the red line or the red flag that you referenced would be a significant third party stepping in on Iran's behalf and working with them to strike core Western assets, which would include the Straits of Hormuz, in which I don't think is going to happen.
Right. And just checking in on some of the headlines coming through right now. We've seen is Iran's supreme leader asking Putin to do more after the U.S. strikes. China saying the U.S. attack on Iran has damaged its credibility. We have seen more airlines as well looking at Middle East cancellations after those strikes in Iran. Overall, though, after a brief dip amongst Asian stocks and currencies as well, we're starting to see this stabilization that is going on, especially across Europe. And Dylan, what is the mood music like there over in Milan in Italy? What is the, I'm sure you've spoken to loads of people. How are they feeling after seeing all this on the TV at the weekend?
I mean, everybody kind of goes through. I don't think it matters whether you're in Milan or London or New York or, Cape Town. Everybody kind of has the same experience, which is sort of, elevated concern, fear, anxiety, probably some catastrophic thinking. What are the sort of second and third order implied potential actions, and sort of the fear that obviously can generate. But as you move past that initial shock and anxiety, I think that it very quickly sort of mellows into more of a sadness for the tragedy of the world situation. And so that I think as the anxiety subsides, that it really transitions into a sadness and a compassion for the people of Israel, for the people of Iran, especially for those two countries. I think that in 2025, the idea of using explosive devices to blow up buildings and kill civilians is profoundly idiotic. And I think that that's obvious pretty much to every human being on Earth at this point. I mean, it just is the least productive concept for problem solving that I can imagine. So I think that creates, it goes from an experience of great anxiety and fear that then pretty quickly transitions into a sense of sadness and compassion, and particularly, like I said, for the people in both of the primary countries that are involved in this conflict.
Yeah, same here as well. I mean, Trump has talked about and raised the question about regime change as well in Iran, right? And he was on Truth Social writing that if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? But do you think this is actually what, the U.S. really wants, or the Trump administration wants to change the regime there? I mean, can they actually invoke that if there is essentially no other regime to take over at the moment?
Yeah, I mean, I'm not going to speculate on what the Trump administration wants. I think that, the thing with regime change is in the world of magical thinking and fantasy, it is the most appealing concept, right? If only there was different leadership in this country or that country, and then people look back and they're like, look at how Iran was in the 70s, or look at how this country was. Look at it's easy to do that. If you talk to any of the more qualified military analysts in the United States, toppling a regime, as America proved in Iraq, is relatively easy, especially for the United States, which has overwhelming military capabilities. However, you bring up the only point that matters, which is everybody's also aware that once you've knocked the regime over, you're more likely to end up with a Libya, which is an open slave trading tribalism chaos, which was a regime change effort by the Obama administration, or Iraq, where you ended up with ISIS, which was a Bush-led regime change operation. I think one of the bigger concerns that I personally have right now, just in observing all of this in the context of my expectations, which obviously are just mine, but Iran has been centrally influential in stabilizing Iraq.
Yes, and
And
Iran,
the reason
yeah,
that
say what you
ISIS,
like
the
about
reason that ISIS,
the regime. They
yeah.
are a stabilizing factor in the region as well.
And
if,
so the biggest risk, I think, of this whole situation, outside of the obvious risks that to the two countries themselves, and then whatever escalatory sort of probabilities are, which I think are low, but I do think that there's this does have the side effect of potentially significantly empowering ISIS in Iraq, which would, I think, would be the one most sort of highest probability unintended consequence. And ISIS is more nerve-wracking, I think, for everybody, because they really function as a asymmetrical global terrorist network more than they function as an organized government regime. When you're dealing with an overwhelming counterparty in a military environment, which the United States obviously is the most overwhelming military counterparty in the world, and Israel's not really that far behind in terms of their capabilities. When you're dealing with a overwhelming military adversary, the most advantageous way to engage with them is not through direct engagement, but is rather through asymmetrical, stochastic terrorism. And so I think the biggest risk to all of us right now is not so much some grand retaliation from Iran or its allies, but rather that the degradation of Iran empowers ISIS and its organization in Iraq, which then fuels a higher frequency of stochastic or random acts of terrorism, which I think is a higher probability than any major retaliatory action, outside of the fact that I think Iran will continue to do everything in their power to deliver ordnance into Israel, which I think is going to be increasingly difficult, because literally every time Iran launches something, they end up identifying their launcher, and Israel is extremely effective at using basically Israel saying, launch everything you've got, the sooner the better, because every time you launch, we identify your launch location and we neutralize it. And so you've seen the number of missiles coming out of Iran collapse in number just in a matter of days, just by virtue of that exact fact, which is Israel is very effective at identifying the launch locations once they have been utilized and rendering them inoperable.
And this is a really key point here, and you can remind Rich that I said this on air, because he poo-pooed back in back end of last year, poo-pooed my defense call and said, you know, no one's got money for a defense. No one's going to be able to, you know, it's not going to happen. And I said, no, defense, we're in a super cycle, baby, whether you like it or not, because, you know, things are just going to get more uncertain, not less uncertain. And once we're seeing the stabilization, Dylan, or like markets relatively shrug off what's happening in Iran, what you're seeing in RSACs, and have a look at this, is that, you know, I'm showing you the Northrop Grummans of this world, right? Take a look at Lockheed Martin as well. Lockheed is one that trades all sessions here on the IG platform, and it is up 1%. So whilst you see gold ease off, you see commodities like oil ease off, we are seeing the defense names that are instrumental in this modern warfare take up. Let's take a look at Palantir, which actually are the eyes of many defense software weaponry. It is also up more than 1% there. Palantir still above that Ichimoku cloud as well. Also, we had NATO earlier on. I think the comments that were coming through this weekend is that they were looking to perhaps boost their spending as well. You are about to possibly also see some updates later on. Dylan, you waiting for, I don't know what time it'll be your time, but here I've been hearing on the grapevine some press conference that's coming from the States in the next few hours to update people as to whether or not they struck those targets and disabled them. These are the 3 nuclear targets in Iran.
Yeah, I mean, there's a lot of skepticism to that fact.
Yeah.
You know, obviously there was some degree of degradation, maybe a substantial degree of degradation.
Yeah.
Most of the military intelligence that was circulating in the United States prior to this.
Yeah, but at the moment,
it,
we're seeing like just images of like dust and debris, but no one's actually confirmed yet, right?
Well, because it's the depth, right? I mean, the analysis previously was that it would require 10 a flight of 10 B. So the B-2 bomber, as everybody has seen in the past and has recently seen, is arguably the most powerful military weapon in the world because it can launch from the center of the United States, fly a 37-hour round trip, and drop these bunker busters that go down 60 meters. The counter to that is that Iran has been aware of this for decades and that their infrastructure is built at such a depth that it would require 10 B-52 flights, or 10 B-2 flights, excuse me, in order to do that. And it's not clear whether the United States has done, and the United States obviously ran some number of B-2s. It's not clear that they ran the stack of 10, and the 10 have to hit the same location 10 times in a row in order to actually create permanent destruction. And so we'll see. I mean, it's really going to come down to the engineering on the Iranian side over the last 30 years versus the ordnance and the capabilities of the bunker busters coming off of those B-2s. I don't think it's out of the question that the United States will run more, by the way.
And also, they have to hit them, by the way. Just looking at the chat there, because we have a lot of knowledgeable people here. They not only have to hit them in a row, but they have to be at a certain height. So those bombs drop at a certain momentum. A person saying Dylan should be featured on Tasty during our time, but everyone reminding a person that Dylan is now speaking from here because he is in Milan. Bigger Beers saying not to mention the US and allies have been leaving the Middle East, and also a person talking about satellite imagery. The gallery put up my screen before I could call it, but if you're looking for satellite imagery on things such as Iran and very good imagery, Maxar is the satellite service that is used by a lot of the top surveillance teams in this world, and also many of the geopolitical correspondents who write all this good stuff for the Bloombergs and the Reuters. So Maxar is what they use. Right, we have to head off now. Dylan, really good talking to you, and I'm sure you don't need it, but break a leg for tonight.
Thank you so much. Thank you so much. I can't wait to see you, hopefully sooner than later.
Fantastic. Send us pictures and we'll get them on Trade Live with IG.
And looking forward to seeing all of our trader friends a little later. Thanks for coming into town, and everybody travel safe. And I'll see you in a few days.
Great. Thank you very much, Dylan. And we are going to have Axel Rudolph coming up next with Trader of the Week. So slam your questions here and we'll get him to answer them.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hello and welcome to Trade of the Week on Monday. I think it's the 23rd of June. Yes, it is. And let's get straight into today's Trade of the Week, which is to go short the US dollar against the Japanese yen. And why would I do that when the US dollar exchange rate is heading higher? Well, basically, I'm still looking at the trend, and you can see here the trend since January of this year has been pointing down. We've had a series of lower highs and lower lows, and yes, short term we're heading up again, but we saw something similar happening at the beginning of May and also here in March, and then the trend resumed because from a fundamental point of view also, we still expect the Bank of Japan to keep on hiking its rates, whereas we expect the Fed to cut twice this year. Now, short term, the US dollar has risen today because of the escalation in the Middle East over the weekend, with the US bombarding several nuclear sites in Iran. And that has led to flight to quality flows into the US dollar, hence this spike higher that we're seeing at the moment. But I would like to use that to go short dollar yen. And basically, because of the current geopolitical situation and it potentially escalating in the next few days, I would like to use a pretty wide stop, not just above the May high, but also above these highs here going back to the beginning of March and end of March. So they're just sort of above 150.30. Why all the way up here? Because basically, as I said, short term, we might actually slightly go higher, go towards 148.50, 148. And we've got a lot of resistance here, previous lows coming in just above that area. And that's why I think we need a little bit of a wider stop this time. But we would only put this trade on if we have a good risk to reward setup. And therefore, my downside target is still the low seen back from April, and that was around 140. And before I summarize this trade, I'd like to also talk about last week's trade, and that was to go long the DAX 40, the German stock index. Here, it looked as if we had broken through a downtrend. We were heading higher on the day, but then unfortunately we got stopped out because we fell just below that low from the 23rd of May, closed below there for a day, and we're trading back above it now. But that trade would have gone wrong, and we would have lost 2% of our trading capital on that trade, because that's what we're risking per trade. So in summary, today's trade of the week is to go short dollar yen at around current levels, let's say 147.50, 148, and have a stop loss though at 150.30 and a downside target in the 140 region. I can't hear the gallery. Okay, I can hear you now. Let's go straight into technically speaking, and I've got loads of questions. So let's start off with the first one. Let's have a look at DoorDash. Who's got DoorDash? Monkey Man, here we go. Are you short or long? Don't tell me, I don't want to know. But right now what we're seeing here from the longer term chart is a bullish trend. And basically we've been trading sideways with a slightly bullish bias here over the last few days. If we go to the longer term charts, as you know, I always prefer to go to the longest term chart possible, and this is the monthly chart. We can see our all-time high going back to November of 2021, and right now we've broken above previous highs from February, and we are on track for our third consecutive monthly rise here. So that looks pretty healthy to me for the bulls. Short term, there's a potential signal for some consolidation. Why? Because as you can see here, today's intraday high was higher than the one from the 16th of June and higher than the one on the 5th of June. So we have a series of higher highs. But if you look at the oscillator, the relative strength index here at the bottom, you can see that basically we have a series of lower highs, which is negative divergence. So basically we're heading higher on the chart, but we're pointing down on the oscillator. So that's not confirming the current price strength. When we see negative divergence in about 70% of cases, it does tend to lead to at least a short-term correction in the trend. So it's possible that we could, over the next few days, just come down again. But basically for me, as long as we stay above the last reaction low, which is the important reaction low, which is this one here, going back to the 10th of June low on the daily financial bet, that was made at 21,098. Provided we stay above there, we still have a series of higher highs and higher lows, and that uptrend very much remains intact. Now I've got another question here on Palantir. Let's have a look at Palantir, very popular stock. And you can see this all session chart here. Again, let's go on to the monthly chart, and we can see Palantir making new all-time record highs. Very healthy, continuing in its uptrend on the weekly chart. Losing a little bit of upside momentum here, but still bullish. And on the daily chart, we are basically still looking good, because basically if you look at the trend line here, you can see that we remain in an uptrend. We continue to see a series of higher highs and higher lows. Yes, we're losing upside momentum, but it could just be one of these phases that we saw, for example, around the end of May. We just trade sideways for a while, and then we go higher again. So here the trend is still very healthy. The oscillators, yeah, they're not even overboard. So we could have further upside, take us to new all-time highs. For me, from a short-term trading perspective, it would probably be this low here, because you can see we have two sharp down days followed by four here up days. That last reaction high is the important one. So here on the daily financial bet, 11,725, that's probably your stop loss if you're long. From a medium-term perspective, you can place it wider. You can see here from a medium perspective, we have these highs here, and also the high going back to February of this year, which should act now as support together with this low. So we should definitely remain above there. But if we don't, and if we were to fall through the 6th of May low, the next lower important relative low, then that could mean that the medium-term uptrend is actually broken. So that would, from a longer-term perspective, be my stop level here. But yes, Palantir is still looking good. Now I've got another question here saying, away from the numbers, could you take a look at BMEPB? Let's just do that, BMEB. So British European value, and that's the beauty of technical analysis. We can look at any market that is liquid. It doesn't matter what the asset is. It doesn't matter whether it's an ETF, whether it's a fund, whether it's a stock, a share, a currency, a commodity, anything. So what we can see here is, if we go onto the very long-term chart, that we are actually retesting on the monthly chart the lows seen from February of this year. And you can see that low in February was made marginally above this March 2020 low. And that in turn was made not that far above this July 2016 and November 2016 low, and also the low seen in October 2014. So what's the trend telling us? Well, the trend is bearish, as we can see here. Even when we had this 1 month up move here, and we could see that perhaps we were trying to reverse, we then had this doji and then this sharp monthly down candle again. Now this one is June, so the month of June is not finished yet. So that pattern doesn't mean anything for the time being. But if we go onto the daily and the weekly charts, you can see on the weekly chart, we've had 2 consecutive weeks of falling prices. And then last week we just held here above the support. So technically speaking, this support here on the daily financial bed going down to 254.60, that's the line in the sand. If you want a wider stop, then it's definitely the 16th of March low 2020 at 246.16 in case you're long. But if we fall through there, it is very likely that this downtrend will take us lower towards these lows here. And that would mean we're going back down towards 228.63 to about 225.18. But the trend is your friend. It's pointing lower. As long as we don't take out the May high, which on the daily chart is quite a long way away at 348.95, we remain in a bearish trend. From a short-term perspective, as long as we stay below last week's low, ideally actually this low here, because that one's more important because we had this huge decline trying to bounce back here after this hammer formation, but then failed again. So as long as we stay below the 6th of June high at 294.50, the trend is still very much pointing lower. Right, let's look at rubric. Let's do that. I've got loads of questions here today, so I'm going to try and answer all of these if I can, if we have enough time. So let's do the analysis together, because also these sessions are here to help you learn. What can we see? We can see 4 months of rising prices, 2 months of lowering price, and then a nice bullish candle here last month in May, a very positive bullish candle. That's all very good. We may retest the halfway point of that body between the open here and the close. That might act as support together with these highs going back to February of this year. That is on the daily financial bed at 7,989.5. That's support here. On the weekly chart, we've had 2 consecutive weeks of falling prices, so we're losing upside momentum. And on the daily chart, what we can see here is a correction of this trend. But it's normal for trends to correct. So what can we do here is we can put a Fibonacci retracement on this chart and see how far the correction could take us. Normally it's about 38.2%, or sometimes it goes all the way to 61.8%. But when that is the case, most of the time it's not necessarily a correction, can be a change of the trend. But we take the lowest point of our chart here, as you can see, that's the lowest point. We then connect the Fibonacci retracement to the highest point on our chart, which is this one there. And then we draw our retracement levels. You can see that's the 23.6. That's not so important, but as you can see here, the 38.2% Fibonacci retracement comes in here at 8,188.9. So that is potential short-term support, maybe, I don't know. Below that, we've got a 50% retracement down here. From a technical perspective, what we can also look at is the distance from that high to this low here. If we take that distance and project it lower from that high here to the downside, that takes us also into this area between, let's say, the 38.2 and the 50% retracement. So if that is an ABC Elliott wave correction, it should end in this area here, and we should then continue the trend. So yes, short term we are bearish. If you're short, your stop loss is probably the high from the 16th of June last Monday, which on this daily financial bed was around 9,422. If you're long, then it is possible that we may find support in this area, sort of down to 7,530 perhaps, before the trend then continues. But the trend was very healthy for a long time, so this is more likely just to be a correction in an uptrend than a new downtrend from a longer term perspective. And you can see here we've been overbought on the relative strength index for over a month, so it's normal to have a corrective phase, and that's all we're having at the moment, in my opinion. but I'm not giving you advice. You have to do your own analysis. But the chart to me looks as if we're just having a correction in a healthy uptrend. So another question, Tesla up or down? Well, tell me your time frame, because the problem is you could be looking at a totally different time frame than I am. Well, on the daily chart, what we can see here is that we tried in the overnight session so far, because this is an all sessions chart, to break out above the 11th of June high, but we failed so far. So as long as we still stay below there, we might just be trading sideways. If we were to manage to break above this high and close above the high seen on the 11th of June, then it's quite likely that the Tesla share price, in my opinion, could go higher again and may retest the highs seen back here around on the daily financial bed to 35,496, or even the highs seen here at the end of May at 36,756.5. So why am I saying that? Because you can see here from the low in April, we've had a series of higher highs and higher lows despite that sell-off. If you're long, that important sell-off here is where our relative low is, and that is basically where these previous lows were made. So I wouldn't look at this one because that's marginally below there. I would probably, if I'm long, put my stop loss from a medium-term perspective below these lows down here. So that's them around 27,104. So short term, as long as we stay above the 13th of June low at 30,945.5 on the daily financial bed, I think this chart still looks bullish. Medium term, we're still bullish whilst we stay below these lows here, going back to the 30th of April. And in the very short term, as long as we stay below the high seen on the 11th of June, we might slip a little bit further intraday. But yes, we'll have to see. Another question has to do with AMD. Keep these questions coming. I love this. What can we see here? We can see that basically we broke through a downtrend line, which I need to redraw, but that was the downtrend line. We broke through it. We then went higher. And we can see that we are trying to form a bottom here. And we have, technically speaking, formed a bottom. How? How do we know that? Can you see these highs here going back to February and also to March? Those were the important highs. That was resistance with these lows. And then what we had is a close not above these highs there, or yeah, it was actually on the 11th, 14th of May. For the first time, we had a close above these highs. So that was telling us that it was very likely that we are now coming out of this downward session. Then we went sideways. And then we broke above this high here again, closed above it. And then we had a confirmation with a nice big bullish candle here on Monday of last week. So for me, that trend is very healthy now from the April lows and is likely to continue. Where's my stop loss if I'm long? The last reaction low, that's the low here from the 13th of June on the daily financial bed at 11,506. So you can see we always apply the same sort of methodology. Now, you might not agree with mine. You can come up with your own. But I always have a very systematic approach of how I look at the market that I'm looking at. It doesn't matter what the underlying asset is. So I've got a very disciplined approach and a structured approach, which I can replicate on all kinds of time frames, all kinds of different asset classes, and therefore, which I know, for me at least, works because I know at which points I'm most likely to be wrong than right. So here, the last reaction low is this one here. As long as we're above there, it's still bullish. Another question, Pelican. Forgive me for not Peloton. Oh no. Archer, sorry. So Pelican is the name of the person who sent me the question. Arthur, I was wondering, what is this stock? I haven't heard of it before. Sorry, Pelican. Yes, so Archer Aviation. Well, this one is interesting because that's the sort of thing I would put into an exam. Because you may know that I'm part of the Society of Technical Analysts, and I am outside of IG also responsible for the education for the UK body of technical analysis, the Society of Technical Analysts. And by the way, you can learn a lot there about technical analysis. All the stuff I'm showing you here, we also teach at universities and in courses. So have a look at that if you want to learn more about technical analysis. But Archer aviation, why is it interesting technically? Because we've had this huge up move in November 2024 on the monthly chart. And then can you see these candles where you have sort of moves to the upside, downside, and then we close more or less where we opened at the beginning of the month, at the end of that month. And then the same happens in the following month in January and again in February. Then we had a big down month in March, but then a bullish month in April. And then we had this huge spike higher to, on the daily financial bet, an all-time high, but we closed basically where the previous closes were back in December and January of that year. And at the moment, we're trading back in that area. So it's unclear what's going on here. What we can see here is higher highs having been made on the weekly chart. But if we look at our oscillator, and you can see this, we've applied it on the daily chart. Now we're applying it on the monthly chart, a weekly chart. Can you see here that that high is lower than the high we saw back here in December? So we have a lower high, not confirming this high. And then lo and behold, we had this potentially bearish Harami formation, and then we sort of drifted low over the last few weeks. So on the daily chart, what we're seeing now is a loss of momentum. We can see this small candle. So here the investors are just waiting to see what happens next. Where's our last relative low? Well, it's the low going back to the 5th of June. That on the daily financial bet was made at 910.5. So basically, as long as you stay there, that might still be a sideways trend, and we may go back up again. But can you see here from the 7th of April's lows, we had an uptrend. Then we have potentially what it can be an A, B, C zigzag. So it's this zigzag formation, this three-wave counter trend formation I just talked about on the other chart. And that could have meant that this corrective move has now ended, and we're just in the first phase of another up move. So that was the up move. Now we go down, we have another up move, and we continue the trend. So basically, for that reason as well, the 5th of June low is the one to watch if you're long. If you're short, well, obviously the all-time high here at 1,441 is your stop loss. If you want a tighter one, it's the last reaction high, which is the 11th of June high, 1,251.5. So right now, we're between a rock and a hard place. You can see little volatility, and we're just trading sideways. Right, oil. Well, oil is an interesting one, isn't it? I mean, you might have read the articles I wrote last week with regards to the crude oil price, where I came up with all the different scenarios. What happens if the Strait of Hormuz gets closed? I'm not as bullish as Goldman Sachs, for example, who said that if that were to happen for a month, the oil price would be on WTI going up to $110 per barrel. My targets were sort of $95, but still have a read at that article from last week on the IG website, or look for my name and oil, and you can see I did analysis technically and fundamentally on that last week. Right now, what we're seeing on the daily chart is that in the Sunday session, we moved up because the oil price shot up to 5% when the US bombarded the nuclear facilities in Iran. And now we've got the Iranian parliament also voting for the Strait of Hormuz to be closed. And we know that about 20% of the global world oil goes through that, and also 25 to 30% of LNG gas. So that would be quite bad for all of us, but also very bad for Iran, which is why the market seems to think, since the Supreme Council hasn't approved this closing of the Hormuz Strait yet, that maybe that risk is not as high as people thought over the weekend. So you can see here we had this Sunday candle, but on the open market, on the real market, here we're looking at the daily financial bet, that didn't happen. So right now, we're basically trading back below the high we saw on the 12th of June when Israel started to send missiles towards Iran. So what can we see on our chart? Well, we can look at our highs and lows, and we can also look at what our oscillators are telling us. So if we look at the RSI, excuse me, you can see here I use the 9-period RSI because I want earlier signals than the other people who use it the 14-period. And you can see here what we're potentially seeing here is a higher high, but it hasn't been confirmed by the oscillator when we're making lower highs. So that's potentially negative divergence, which could mean that we could actually come off with regards to the oil price over the next few days. Now, obviously, if the Strait of Hormuz were to be closed, or if the Supreme Council were to say that they wanted to do that, then we will probably very quickly rally above this high and go higher. Where are the next upside targets? Well, we can see here, we've got these highs here going back to August of last year, October of last year, then the high seen here at in January of this year. That was around $79.60. So on the daily financial bet, 7,959.8. And then the next upside target would be very quickly the July half 2024, and that's around $84. So that is a distinct possibility if we were to rise above that high that we made on Sunday. But for me, technically, the high from the 12th of June is more important. So if we rise above that one today or in the next few days, then I believe the uptrend will continue very rapidly. In that case, your stop loss would be probably the low from the 16th of June from last Monday. That was around $68. And basically, if we don't have an escalation, we could just drift slowly back down again towards the previous support area. You can see here the high going back to April of this year, around $72, or perhaps back towards the $70 area. So that is a possible scenario. Right now, short term, we seem to be drifting slightly lower again. Right, I've got one last question I can answer here very quickly before we run out of time. Wise PLC, let's look at this one. You can see here on the monthly chart, we retested and intraday made on the daily financial bet a new all-time record high earlier this month, but on the daily chart we then came off. So if you see sort of 3 days of negative candles taking out one positive body of this candle here, that is never a good sign for the bulls, because then what we saw is a fall through these previous relative lows, and now we've fallen down here. So right now we're just trading sideways here, but the downside pressure seems to be more prevalent than the upside pressure. So if you are long from these April lows, then your stop loss is probably just below these lows, below the low we saw on Friday and the previous week, in which case we could just continue to trade sideways. But if we fall through these lows, it's very likely that we may actually go further down towards the 950 area in the next few days or so. If we were to go above the high seen here on the 18th of June at 1084.5 on the daily financial bet, then that probably means we're broken out of the sideways trading range in the short term, and we may go back up again towards these highs here seen at the end of May, 1133 or so. Thank you very much for watching Technically Speaking with me, and I hope to see you on Charting Crypto, where we'll talk about technical analysis as well on Wednesday, 8:30.
The Fed holds, and so do markets. It's Wednesday, June 18th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Glenn Freiberger in Chicago. Welcome. Thanks for stepping in for Dylan today. He's getting ready to take Tom and Tony around Europe, which should be a lot of fun. We're here for the next hour as we take you through the futures market close, 5 p.m. Eastern, 4 Central. If you're joining us on the platform, tastylive.com. Welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading today, what you think of this market action. Before we get there, of course, I think it's worthy to remind everyone the futures market is still open right now. And if you have any last-minute trades you like to get across the board, now is the time to do them, or you hold your peace through tomorrow, because, of course, the market's closed tomorrow for Juneteenth federal holiday. When we see the futures close today at 5 p.m., it's basically like a Friday close, and then tomorrow is effectively a Sunday open, where we'll be back again trading at 6 p.m. It's why we warned that if you had dividend affected positions today or for Friday, you should roll them today. Okay, so that's all off the board, guys. The Fed kept rates on hold. That was not a surprise. 99+% chance of them doing so, according to Fed funds futures spreads. Going into today's meeting, the policy statement itself did not change either. Outside of the date and maybe changing a name here or there, the red line was
boring.
The same we saw in May. Very boring. But what we did see was a change in that summary of economic projections. We see that the Fed is cutting their growth forecast. They're boosting their inflation forecast. They're telling us that we're still going to get 2 cuts for this year, but ultimately maybe not so much more in the future. They are forecasting a higher structural Fed funds rate, a higher for longer, if you will. Stocks don't love it, nor do they hate it. Neither do bonds. It's a flat day right now. S&P is now flat for the session, 0%. NASDAQ's off by 0.01. Russell is the only significant outperformer, up by 0.56% here. Ilya, because you and I just had a chance to talk on last call for a bit, I just want to kick it over to Glenn here for some thoughts. Please. Glenn, this is a big day for us, particularly for FX people like yourself.
Oh, yeah.
We care about the central banks, and I don't know if this one left much of an impression. How are you seeing things from your side of the desk?
Yeah,
what's happened today.
I mean, if you set the backdrop for me this morning, war, FOMC, random holiday coming into the middle of the week, I would have expected things to be a lot more exciting. And even so, one of my predictions for this day, how it would unfold, is with getting the summary of economic projections, getting a lot more numbers on the release of the meeting. I would have thought the move, and knowing how cautious Powell tends to be, and everyone kind of expecting what he's going to say at this point, would have thought the move would have been at the 2 p.m. Eastern time, at the release of all of those economic projections, all those new numbers. And we saw kind of a muted reaction there, and the slide coming actually during Powell's commentary, which I thought for this occasion would have been reversed. So that surprised me a little bit. But inside moves all around, tracking dollar prices, we did see a little bit of dollar strength come back. The snap reaction was dollar weakness. As you know, the 2 cuts taking the headline there. A lot of people thought that they would edit the dot plot to perhaps just 1 cut this year. And so an initial dovish reaction, but once Powell got on the mic and started saying, the rhetoric around the inflation costs will be passed to someone, we don't know who, we all know who. But then we saw the dollar start to get bid up. A lot of that tension release in pairs like the euro dollar and pound dollar that were pretty wound up beforehand, and even some more back and forth in the Australian dollar and Japanese yen, who were moving, trending in the dollar's favor, or not in the dollar's favor leading up to the meeting, and now coming back a little bit. So a little bit of diverse price action from a charts perspective, but pretty unanimous across the board. Dollar story starting to get a little dollar bid.
Ilya, it seems like the dollar is coming back here a little bit. I'm just flipping through some of the spot FX positions on the chart, and you can see that once you get that initial shakeout where the dollar softens up a touch with the release of the policy statement, and realistically, it's the summary of economic projections that get it moving, given the lack of changes. The dollar does make its comeback as Powell begins to speak. And, we get the sense right now that at the margins, the news flow, the tariffs, the geopolitics of it all, it puts the Fed in a position where it does need to continue to wait to see if the timing is right. Ilya, I can't help but reconcile the fact that 2Q GDP, even if it's just for accounting purposes, is going to be much stronger than what we saw than in Q1. And so the Fed is probably not going to have the ammunition in its back pocket of a recession by July, right? Because the July meeting, right, to say whether or not they should start cutting. It seems like the Fed is going to be sticking around in its current location for a while longer than probably people want it to, than it would like to, but its hands are tied right now.
Yeah, and I don't think currency markets are particularly surprised by that, or we'd see the dollar strengthen more considerably. I think when you look at really what's happened, if we can just zoom back here, this is a 5-minute chart that we're looking at. If we go to a daily for the yen, if we go to anything a little bit longer term, we can see that the dollar has been facing relentless selling since the beginning of the year. We saw that, of course, in April. We had the whole scare at the beginning of the month with Liberation Day. And against that backdrop, once that sort of normalized a little, we saw the dollar strengthen a tad and then come right back in and establish a kind of sideways consolidation. If we look at the yen, similar story in the euro, similar story in the pound, really stubborn consolidation with almost no motion at all in the Aussie. But whereas stocks have clearly recovered off those April lows, the dollar has not really managed it. And so one of the more interesting things here has been this sort of relentless bearishness on the dollar in markets. It doesn't really seem like that bearishness has a very concrete argument to unravel on the basis of what the Fed said today, because as we were just saying on last call, the only kind of notable change in the SCP, everything else was very predictable, right? The Fed signaled already as recently as May, we're going to increase the unemployment rate forecast. We're going to lower the growth forecast. We're going to increase the inflation forecast. That's exactly what happened here. We're going to widen the bands around those forecasts because uncertainty has increased. We really have no idea what's going on. All we're saying is we know tariffs historically are going to have these effects.
Did you find that to be, I saw that uncertainty, and we measure uncertainty as the bands around the forecast widening out. The Fed says here, uncertainty about the economic outlook has diminished.
Yeah, what the heck?
But remains.
I mean, I think you look at the S&P 500 and you hear what Powell says, and he goes, well, since April, it's diminished. Well, yeah. yeah. Since April, it's diminished.
Thank goodness.
Can I say that I just sat and listened to the whole meeting? And then halfway through, I started playing it back from the beginning while I was listening in one channel, and then I had it on mute on the other because I think watching Powell's body language is an interesting enough exercise. Yeah. I walked away thinking that the Fed has no clue what's going on right now.
They're saying as much. They are loudly saying, hey, look, with an unemployment rate at 4.2 and an inflation rate at 2.4, why in the world would we try to make up our mind now? Well, it's going to take time for the tariffs to work their way through the economy. But the upshot, again, dollar-wise, yields-wise, I think is the market is very much not on the Fed's page when it comes to this change in the rates forecast, where they went and dropped the rate cut from 2026. The market is flipped the other way. They think we get the 2 this year, and then we get more easing next year, not less. As that speculation builds, it'll be tough for the dollar to go up in a lasting way. It'll be tough for bonds to stay anchored.
I just realized this is not the correct. That's the correct one. Not sure why I pulled up last year's. Okay, so one thing that I noted here in the language too, the unemployment rate remains low. They changed from has stabilized at a low level in recent months. So low to the Fed is basically below 5%. But what we should be aware of is in the most recent non-farm payrolls report, the unemployment rate was technically 4.244%, which means if it was 4.245%, it would have been rounded up to 4.25%, which means it would have been rounded up to 4.3%. So like just by the skin of our teeth did we miss seeing an unemployment rate miss last time. So if there is something the Fed's getting ahead of right now, there is this slight adjustment in my read through that the uncertainty persists because the situation's degrading. It's not falling off a cliff right now, but we're kind of gliding into a less comfortable economic environment moving forward because growth is revised lower again, unemployment's higher, inflation's higher. That's not stagflation itself, but it smells stagflationary. You don't technically have high unemployment, you don't have negative growth, you don't have high inflation, but lower growth, higher unemployment, higher inflation. That's not a fantastic mix right now for sentiment. But sentiment's really bad in this market already, Ilya. I want to stick with the dollar here for a second because the dollar sentiment just kind of drives me up the wall for the most part. The action today, the dollar was lower. It does resolve itself to the upside. You can see that we're now testing the downtrend from the February, March, May, and perhaps now June swing highs here. The Bank of America Global Fund Manager Survey, which was released yesterday, shows that fund managers have not been this bearish on the US dollar since January 2005. We know from the futures market, the euro positioning is the most net long it's been over the past year. We know that the yen positioning is basically the most net long that it's ever been. We can just go down the list. The pound's in a similar situation. The Canadian dollar's in a similar situation. The dollar is really stretched. Glenn, how are you feeling about the greenback here? Because it feels like it's the most hated asset in the world right now.
I know, what the heck?
But that's probably a good opportunity for contrarians like ourselves to look long.
I agree, and the one thing you're pulling up here, DXY, to me, what screams out in the spot Forex market is if you're stuck looking at a chart like this, where you're saying it might break out of its bearish trend, you have a lot of unique chart patterns in these markets and a lot of opportunity to catch the dollar, regardless of if you are continually bearish or are betting on a dollar comeback. You have a lot of different charts to try and get in here on, and a lot of unique price points. So that's, in terms of unpacking the dollar story right now for me, I think that's the most interesting angle. I mean, you have the euro dollar at coming off of 4-year highs. You have dollar Swiss franc seemingly pinned at 10-year lows, but now starting to build some positive price action there. Just now in the hour after the Fed meeting, now returning to levels in that market that we saw last Thursday. That had been a significant laggard, a lot of pressure getting relieved in that market. And so I think maybe it's just me who's looking at these markets a little more than the average trader, but there's a lot more granularity and potential opportunity when looking at the spot dollar markets than the dollar index, because that's a pretty disheartening story overall, just putting the dollar in a basket and checking the year-to-date performance. So that's what I'm looking at. I've got some client sentiment from tastyfx, IG group clients, and that shows us that this dollar Swiss franc market, let's get in here in my, just hitting a refresh for you so I can get the most recent numbers. This dollar Swiss franc market, we've got client sentiment of 82% long. So that aggregates IG group exposure across the whole globe, and traders positioned. And what you're seeing is traders in the dollar yen market now split 50-50 at this 145 level. You're seeing euro dollar and pound dollar both net short to the tune of 60% net short, and then Australian dollar and US dollar, Canadian dollar, both net long. So you're seeing a little bit of mixed positioning when you get that granular, as opposed to just one of the what did you say, the Bank of America fund managers. So it's
actually
just
very, very interesting, very interesting numbers, because to your point, Chris, and yours, Glenn, the 80-20 split net long in a dollar Swiss would tell you you're getting to the kind of a place. And by the way, we should kind of preface this by saying retail sentiment tends to be a contrarian indicator. So what you tend to see is when a market builds net long, that market tends to be going down. That tends to be a bearish signal.
Can we explain? Do you mind if I explain why that's the case? Because it's
very important to explain why that's the case. Because it's not that people are wrong. That isn't what that's telling you.
Yes, right. So when we look to sentiment figures for retail traders, right, just as we would look for positioning for the COT report. So let's go backfill here a layer further. The COT report, the CFTC's Commitment of Traders report, is released once a week on Fridays at 3:30 p.m. Eastern. It covers the trading week from a Wednesday to a Tuesday. So the next COT report that we see will be the week through yesterday's close, for example. But that leads to a little bit of a problem, because you get the COT report on Friday and the data window closes on Tuesday. So market action Wednesday, Thursday, Friday morning, it's not accounted for in these positioning updates. Okay, then you have to wait another week. So what happens around the Fed today, for example, what happened with the positioning in the market with the Israel war starting with Iran, we're not going to actually see that until this Friday, even though the war's been going on for basically 6, now almost 7 days. So years ago it was contrived. We got to find a more timely positioning indicator. We got to come up with a way to mimic the CFTC COT report, and we got to do it on a real-time basis, right? So we can look to our own client positioning to do so. And in doing these data studies, something interesting occurred. We've talked about this on air before, Ilya, but for the most part, if we were to just do a binary, were you right or were you wrong, retail traders themselves are actually correct more than they are incorrect. The problem comes because of scaling with risk management, where if you're right 55% of the time, but your average loss is twice the size of your winner, you're going to actually lose money, because you need to have a break-even rate of 2 to 1 if you're going to be wrong. Excuse me, if you're going to let your losers run twice as long as your winners. So you need to be right 67% of the time if you're going to let your losers be twice the size of your winners. And that obviously is not what happens here. So why do we look to the sentiment figures? Because when you see these extremes in sentiment, you could trade off of them. Granted, retail traders are usually right. Okay? They're usually directionally correct. It's because of the risk management and the inability to cut losers and let winners run that you see that they're offsides. And what makes this all the more interesting is when you look at the sentiment data and put it next to something like the COT report itself, you could see that retail traders behave specifically like speculators in the futures market, right? Which is to say that they follow trends, and at the tops, they try to fade them, and at the bottoms, they try to pick the bottom. So there's something to work with here. It's a tool that we use to help fill in the gap, because the COT report and other positioning data available in the market isn't updated on a day-to-day or even a minute-to-minute basis. My spiel's over.
Right, but so what, and a very important spiel it is, because first of all, it illustrates why all of us, when we start in trading, have to overcome, most importantly, the risk management side of things, because that really is what makes you successful or not. There's a gazillion ways to analyze markets across different time frames, but if you can't manage risk, then you can't make money over time. But it also illustrates how to read these numbers in the context of sort of their directional implication. You see in reading like 80-20 net long in dollar Swiss, and you go, okay, well, that's getting kind of high. That's getting to the point where you're getting near a positioning extreme. And although on the way into 80%, from 60, from 50, as you're growing net long, the implication would be that the bias is in the opposite direction, that a trend would continue to build in the opposite direction. So if retail is increasingly becoming net long, then the price is increasingly going down. At 80, you're getting to a place where sentiment might be at enough of an extreme where it actually flips. And at that point of exhaustion, people would start getting less net long But of course, then the price would also be signaling that it's likely to go higher. You interestingly don't have that split, to Glenn's point about the diversity of what the dollar is doing. You don't have similar splits in the yen where you're at 50-50. It's not nearly as extreme in the euro where you're at 50-60, something like that. So the dollar here isn't obviously screaming that it's at a point of exhaustion on the down move. And when you look at the levels, I mean, just look at the pound here ahead of the Bank of England policy announcement here coming up in just a matter of hours. We're sitting squarely at former resistance turn support, and we will not clear it. It's a similar story in the euro. It's a similar story in the yen. The Aussie has basically been stuck in the mud for ages now, so it's difficult to even put levels on it. But all of this basically lines up to, we've gotten to the bottom of the range, we've gotten to the deciding line, and we're going to either crack or bounce here. We've been in a sideways range for quite a while now, and that can relieve positioning all by itself. So when you look at something like the Bank of America numbers, and if you then end up saying, you know what, people have sold off some of their short exposure, but the price has only moved sideways and not up on that basis, that's very much a possibility to relieve some of these oversold levels without the dollar necessarily rallying.
I would look to today's candlestick in the pound as perhaps a sign that this thing is rolling over and the dollar's getting ready to rebound before we move off of FX and go back to the broader market. But you can see that the high today bumps into the 5 and the 21 EMAs, the 1 week and the 1 month respectively. Mm-hmm. We kind of break the downside of the trading range here. I go to that 4 hour, right? We clear out the lowest close.
Very possible.
So that's the lowest close on the 4 hour on the 10th. We try to rally back into there, rejection, and then ultimately set a new low. The point is that the dollar has been beaten down. Everyone hates it. The founder of this network fashions himself a contrarian, and for the life of me, I am not that person. I'm a momentum guy. I'm the kind of guy who likes to look at a trend and go fishing and not think. Okay, it's very the kiss method. Keep it simple, stupid. But
you're starting to see that here.
The momentum looks like it's turned, and I think that's the prevailing point. If only as a point of interest, look at MACD. MACD has not set itself down below its signal line with a sell signal going back to the start of April. And that was a temporary blip. Otherwise, for the majority of this uptrend that the pound's been in, that the Aussie's been in, that the Euro's been in, you've seen these indicators stay in bullish territory, and they're starting to give indications that maybe those characteristics that have defined the past several months of trading, they're evolving. We do need to go, Glenn, I do want you to have the last word here on FX before we change the channel and go back over into equity markets.
Yeah, I mean, you nailed it there with the nice part about this dollar story is you had such an extreme run-up that if you're looking and possibly think that things are turning over and a dollar comeback is underway, you have time to and a lot of room to run to wait for confirmation if you see it, because it's not like a typical year where within a year you only have 5% to work with. I mean, especially against European currencies, these are up 10% already. So I think as much as these markets are wait and see, just like the Fed, if you are a dollar bull, you've got a lot of room to run. So I'd say no need to necessarily try to step in front of it, but it's nice to see a little more two-sided action.
Ryan, why don't we pull up, or Paul, why don't we pull up the slide here? Before we get off of FX, I think it's a timely reminder for everyone that tastyfx is now on the platform. You saw us tinkering down there when we moved through the tabs, but you can trade SpotFX now in the same place as everything else. If you go to tastyfx or you head over to the watch list on the platform and you go over to Forex, you have the ability to sign up from there directly. Head over to tastylive.com, tastytrade.com, Glenn, tastyfx to find out more, right?
And there you go. You nailed it.
We nailed it. All right, let's go back to the charts here. Let's talk about what's happening broadly in the markets. We haven't looked at the sector performance here today as we got into the close. It is a mixed day by and large. 5, 10, 13 are in the red, 12 are in the green. So you have an S&P 500 that's up by 0.02. It's basically a clean split between winners and losers. Top performer today, Telecom, XTL. That's up 1.44%. You have the banks that are performing well as well. Too many wells. KBE, KRE are the best of the bank bunch. Otherwise, some rate-sensitive items like home builders were higher. Although, Ilya, today's economic data that came out, the home data was pretty god-awful, which, as someone who has a very particular pet peeve about housing and wants to see more of it built, basically wherever it can be built, building permits are down by 2% from 1.43 million to 1.39 million. Housing starts are off from 1.39 million to 1.25 million. That's a 9.8% decrease month over month.
Yeah.
That's horrible. Okay, but we have home builders rallying today. What's happening with U.S. housing right now? I saw a report this week that there are 5 times as many sellers right now in the market as buyers, a level with which we have not seen since the global financial crisis.
Well, I mean, obviously, we've talked at very extensive length for months and months and months about what the 2022 rate hike cycle did to the housing market, which was basically lock it up for both sellers and buyers. It locked it up for sellers because if you have locked in a mortgage rate somewhere near the national average of 4-ish% or lower, 3.5 to 4 or so, then why in the world would you be cavalier about refinancing at rates twice and 3 times what you may have locked in as your cost of money? So sellers haven't been enthusiastic about selling. That, of course, has kept inventories very, very low because U.S. housing supply is about 4 to 1 existing homes versus new. And we can have a tremendous conversation about all the many ills that can be addressed if we built more housing. But that aside, if you consider for the home builders calculus here, obviously mortgage rates have unclenched a little and people have kind of acclimated to where they've been hovering recently. And so more people are selling, more supply is coming on. The prices will adjust eventually. Housing markets are notoriously very, very slow, and the price adjustment has kind of already started. So now, if you're looking at the home builders, on average, it takes about a year, about 12 months to complete a single housing unit. So if you're a home builder and you say, okay, well, whatever's happening here, we probably get a surge of interest from buyers, and we're going to have inventory for that in about a year's time. So, okay, let's go build it. And if the market is looking at that and that's what they're anticipating, then what we see in ITB starts to kind of make sense. Because the markets go, okay, well, it's not like we're at the end of a price adjustment in housing. We're in the beginning stages and it takes a long time. So for home builders to get ready for what buyers will want to do once they notice, they should be starting to get inventory together right about here.
Yeah, the housing story is not really a national housing story right now. This comes from Resi Club, Lance Lambert. It's using the Zillow Home Value Index through May 2025, which was published earlier this month. Glenn, you and I, people are feeling the squeeze up here still. House prices keep going up in the New York and Chicago metro areas. In fact, in my area, quite dramatically, which I'm not shocked about. My wife works in real estate. Pre-pandemic, May 2019, there were 6,400 active listings in Westchester County, just north of New York City. Currently, they're about 1,600 for this time of the year, which is really odd because everyone puts their homes up for sale in the spring, so they move during the summer and their kids can start September, the new school year. Everyone's settled in, right? So you can see in New York, housing inventory is just non-existent, so prices keep going up. It's going up in Chicago. It's all the places that really built up a lot. Feels like an echo of the financial crisis, Ilya. Las Vegas, Phoenix, Austin, Portland, parts of Los Angeles, parts of San Francisco, right? So look at lower Florida, southern Florida. Anyway, it's not a one size fits all, and that's what's so interesting about how the Fed proceeds here. Because unlike in 2007, 2008, where it was the opposite of a rising tide lifts all boats, it was a falling tide sinks all boats. Everything came down, right? This time it's not like that. It's the areas that saw the significant overbuild post-pandemic. Those are the ones that are getting hit hardest. It seems like it's just going to go on. You said that the bill is going to come due at some point down the line once the rate hike cycle started. It feels like it's coming due for large portions of the country in the areas where you have the most significant housing market activity.
Yeah, it's starting.
Well, why are Austin home prices falling so much? Why are rental prices falling so much? Because they built so much supply. So here in New York, in Chicago, Glenn, got a very different calculus. There was no overbuild. So where's the excess supply to get rid of? Just doesn't exist right now.
Or build. Never mind overbuild. Just build.
I would like to say that my town is doing a great job on this. They've just approved a lot more housing, and 100 new units are coming into town. Taking the steps. After when I moved here, up until at some point of October last year, only 2 units had been permitted in town in the 2.5 years since I moved back home. So things are changing. Things are changing.
Has changed as well. Our new mayor, Daniel Lurie, has been really pushing this subject, and frankly, his predecessor, London Breed, likewise. There's been a consensus that's emerged that the way you bring down housing costs is gasp, shock, build more supply. Because more abundant things cost less. It's an incredible realization. But here we are.
Impressive.
Better late than never, I suppose. And so we're starting to see that here as well. The tide is shifting.
And you brought up one interesting point, Ilya, that you don't think mortgage rates have all that much to do with it now, just because a function of time, because it wasn't expected for a couple years, and now it's looking like the new normal. So change in that regard
they've come
doesn't
down off the high highs.
Mm-hmm. But I'm saying there doesn't necessarily have to be such a dramatic spark there anymore. It lies in other. Okay, interesting.
Yeah, I mean, I think you have to remember how slowly the housing market evolves. So if we consider the sort of the extreme example, stocks bottomed by March of 2009. Housing wouldn't bottom by late 2011, early 2012. It takes a long, long, long time to clear the housing market. And it is frothy here by any stretch of the imagination. So we've had mortgage rates come in. I mean, obviously, they're a little bit lower. The Fed cut rates by 100 basis points last year. It's not surprising. They're expecting to keep cutting. We're quibbling as market participants about 25 basis points here or there, but from a mortgage rates perspective, rates are going to be lower, and you've had the benefit of time. So if they're settling a little bit higher than they were, or than really they would have if the Fed kept cutting, there is sort of the dual thing of we've seen mortgage rates higher in the past 2 years, and they're sort of anchoring in a way that people are getting acclimated to seeing. And we're seeing that, I think, in relatively equal measure, get some of these sellers off the fence.
You can see it's a total tale of two cities. Real estate isn't created equally. For example, the Schwab REIT ETF, the Real Estate Investment Trust ETF, it's been chopping around sideways here for the past few weeks, whereas the home builders themselves, they've kind of keeled back over and started rolling back over again. I'm thinking about this just for myself from like a personal, little bit, not necessarily a trade, but like a longer term portfolio construction perspective. Housing is historically one of the best places to hide if you're going through a period of inflation. Housing that's built, in fact, not housing that needs to be built. And so these real estate investment trusts, they can get very regional specific. I can go and find a REIT that is just about New York City. I can find a REIT that's just for Nashville, or a Southern Sunbelt REIT, right? So where you choose matters. And that's why I bring up those charts, because as I think about some of the allocation for housing plays, the home builders don't look like they're getting any love right now. And in this environment where labor supply is in question, where the tariffs for the supplies for aluminum, for copper, like all this is in question, and mortgage rates are near 7%, what are the home builders going to do right now? So I would think that if I want to have a housing play on the board, housing that's already existing, party that's already built, that would probably be the one to look at instead, as opposed to the home builders. Unfortunately, that's just where we are right now in the cycle. I don't see it getting better. You can see JRE, the Janus Real Estate Investment Trust ETF. This too, similar pattern. This looks like a big, all sorts of a flag to me, Ilya. I see everything as a bull flag, though, given my my delusions of being a bull. So,
if it's a bear market, then it's sideways consolidation. If it's a bull market, then it's a flag.
Yes. In stocks,
easy
yes.
Playbook.
Got it.
Could do this all day.
Yes. Yeah, right. Yeah.
Show me another
Captain
chart.
America trade. Okay, so more consolidation here, Ilya. We haven't touched on metals yet. Mm-hmm. Actually, Glenn, let's go to you first. If we're talking about the potential dollar bottoming, it is worth discussing the positioning in gold. In that same global fund manager survey that showed fund managers are the most bearish on the US dollar since January 2005, long gold is the second most popular, is the most popular trade on the board right now. It's long gold, long Mag 7, short USD. And so if the dollar is going to rebound, these dollar-denominated assets probably have a little bit more of a difficult time rallying. What's your view on gold, on silver? Do you see a difference between the two of them? How do you approach these markets as a more of an FX person, considering it is a dollar-denominated instrument?
Yeah, I think it's been quite a run. And so on the backdrop of a Fed announcement like this and seeing the knee-jerk reaction here, and especially in cryptocurrencies, it's coming front of mind again that, a high interest rate environment, really not good for crypto. And so in my mind, you could argue that even though it might be a crowded trade, all these long gold positions, not really any indication that anyone needs to, mass liquidate and go somewhere else. I mean, you still have all the fundamental storylines behind why you'd want to keep this on. And so it's hard for me to find momentum to the downside in this market unless something really falls apart. And you start to see kind of an unwind, because I feel like there's definitely, given how this asset can be leveraged, there's definitely an unwind risk here, but also very hard to make the case that this could keep running. So, the market structure over the past now over a month, really speaking to, we have settled in here. It isn't like we're in uncharted territory anymore, and that 3,400 is a ridiculous price. And so a sideways market here isn't ridiculous to expect. That's how I'm treating it. Metals in general, I feel like you have to have a lot of conviction to play them, and it's hard. It's been hard at these levels. And you've gotten an opportunity in something like silver or platinum to play the catch-up game. Those ratios definitely have been interesting. But other than that, not too sure. What are you guys thinking?
Hey, platinum's been wild. Wes sort of pointed this out to me today. I saw that it was doing really well this year because it's up like 49%. or 46% right now. Actually, I want to just double check that. I don't want to. This is not the forum to spread fake news. There are other forums for us to spread fake
Vecchio
news.
said.
Yeah, right.
What Chris said.
Dangerous. 46.18% higher year to date for platinum, but on a 3-month basis, it's up 29.99% this quarter.
Yeah.
So a lot of these miners have had a really, really, really good run, which gold, for what it's worth, it wasn't really down that much today. Then it flips and now is off by 0.64%, dips back below 3,400. Some of these gold miners right now, perhaps bad news for one Victor Jones, who I'll be speaking with later today on The Price of Truth. These look like they just ran into significant highs as gold looks like it's having trouble rallying. The dollar looks like it's bottoming. And now the miners are up at levels where we've previously had significant resistance and we're failing around them. Maybe that's the short-term play here, right? Why do you want to hold on to the miners if gold's going down, if silver's going down? You really don't. It's a high beta thing.
I wouldn't go so far as to say silver is going down or gold is going down. I would say both appear to be consolidating. Silver has a breakout here through the range around 36 or so, and it's holding that very firmly here. In fact, on the test today, after yesterday's rally, you're kind of narrowly holding yesterday's resistance as support. So this does not look like anything that's rolling over. The situation in gold is not very different in the sense that while gold is relatively more staid here than silver, it is still in a very well-defined up move, even sort of the most recent up move. If we look at just the low from mid-May, you're holding former resistance as support here. Again, now you are starting to test a little bit deeper under it here today, not dissimilar from some of the deeper testing higher in the dollar, but just like that testing higher in the dollar, I would argue hasn't produced a conclusive breakout, neither has the testing in gold. So I think at this point, it's tempting to want to draw a narrative here, but I don't know that you have one yet. I think so far you still have a similar set of circumstances, which is the trend is up. Nothing is telling you that it's turned. It does make sense, certainly, to be on the lookout for a turn because you're at very significant barriers. I mean, obviously, 3,500 is a very key line in the sand here for gold, which makes it all the more logical that the market is stalling here, but also possible that it ultimately does more than that. So, as with the dollar, I don't see a reason to get long. I don't see a reason to get short gold, but I do see a reason to be very, very vigilant about making those adjustments because they really could be here. They're just not confirmed in my mind. So I'm still long gold. I'm still short dollars, but my trigger finger is itchy, and I might very quickly flip the other way.
So no metals, no metals catch-up play for you. In my mind, that's been the narrative in recent weeks. Is all these other metals exploding? Has that run its course?
I don't know. I'm of the mindset that there could still be catch-up towards gold, right? Because I mean, look what's happened at platinum here. Platinum's gone. It's unfortunate. I guess I can do this. Platinum's gone absolutely nuts. XPT, USD. We'll just.
It does have a tendency to do that every now and again.
Right. This is.
Every now and again, platinum just goes completely haywire. There we go.
Right. You're talking about this huge. Let's get the seasonality off there. This has been a huge advance over the past few weeks. We were below $900 an ounce. We're now above $1,300 an ounce. But that's the catch-up play here, where everyone is saying, okay, gold's run up. It's too expensive for me to buy gold at these levels. I'll buy other hard assets. I'll buy the other things that I can get my hands on that have tangible value as opposed to being digital ones and zeros. which I suppose it should be the last thing we talk about today. We briefly touched on coin earlier during last call. It had a really nice performance today as the Senate passes the Genius Act, 16.3% higher here, outlines regulations around stable coins, which has been a promise of the Trump administration going back to the campaign. So promises made, promises kept, I suppose. Interestingly enough, as this passes, right, what's getting hit the hardest? Visa. Visa is getting hit pretty hard. MasterCard is getting hit pretty hard. What's Amex? Why am I forgetting Amex's stock ticker right now? Someone throw me a bone. Amex stock ticker.
Isn't it
AXP? Yeah. Okay. Why am I thinking Amex? Just totally lost my mind there. Amex different group. Amex is a different group here because, well, it's a different client base. Stablecoins really impact everything else. Stablecoins are really more about what happens with lower income consumers. It's one of the concerns that actually around Walmart right now. Walmart's announced intention to have its own stablecoin come out, and it's seen as competition for potentially, regional or community banks, for some credit unions. But you see the stablecoin news passed today, or stablecoin legislation passed today, and Visa and MasterCards are the one that are hit the hardest. So why am I reading this out? Ilya, we talked Bitcoin briefly on last call. So Glenn, we haven't seen anything in Bitcoin here today as a result of this legislation passing, but it is, again, a dollar-denominated asset. So if the dollar is going to bottom, then Bitcoin may struggle here some. What's your take on the crypto market these days?
Yeah, I mean, I touched on it before. I think around Fed announcements, I don't know why it feels like there is just more of the sentiment around, higher rates. When we really see a bullish cycle in crypto, it is in a low rate environment. And so I think that may be hampering things today. Definitely hasn't gotten any sort of safe haven demand around these events as an uncorrelated asset. I would have expected this good news to be good news for Bitcoin, but again, it's so early in my mind, especially around. I think it's a very simple math equation to say stablecoin approved directly impacts Visa, directly impacts MasterCard. But I am a little bit surprised because none of this has actually played out yet. And so I think it's very early on, and you don't necessarily know who the winners will be. This move in anticipation that stablecoins will crowd out those companies, but I think there's still room for everyone to adjust, and you don't know from a corporate level who will come out ahead as a result of this technological advancement.
Oh yeah, I'm still real bullish. I know I flashed this chart up earlier on last call with all these Fibonacci lines drawn. I know I can't help myself sometimes, but tactically, this looks like a really interesting trade if we're able to punch through 110. Where you've had this just basically 70, we'll call it 74 up to 110 range. Since November, it's been a 6-month trading range. The extension
got nowhere for 5 weeks here at the top of this thing.
But if we start to get moving, the measured move is up to over 135,000, which is why I'm so fascinated with what's happening in this consolidation, because there is that little voice in my head that says we just had a rally off of some low.
Is it a bull flag, or is it a triangle?
Like, what's going on?
I don't know.
Yeah,
is that continuation, bottom left to top right?
We'll see.
Certainly looks like it.
I think I wouldn't be surprised if as psychological as it sounds, the 100,000 level to me right now is really interesting. In a bullish environment, I still wouldn't be surprised if we saw it flash there. I mean, the inclination is if it goes through that, then maybe we enter a different environment. But I still think from a unique price point perspective, I agree with you that we could see anything from 100,000 to 110 and nothing fundamentally changing. That's just the way it's been moving with so many other asset classes at the front of the picture. So
I've said this before. Perhaps the chat wants to chime in here too. Does it feel different this time? I just do not see the people cheerleading crypto in the same manner with which they did in the fall, winter of last year. Right? I'm not seeing the obnoxious videos of people on their boats in Miami. I'm not seeing people at clubs. I'm not seeing ridiculous fundraising rounds. This is the quietest rally in crypto so far.
That's because, you know, all the smart people that may or may not be myself are trying to play Ethereum, and that is not near its highs. Those unnamed traders couldn't go to the club or get a yacht
Okay.
based on this price action. So, Chris, maybe they just don't have it this time.
That's true. I mean, whereas Bitcoin is sitting right just below all-time highs, we're not quite at the halfway mark, but, at near $2,500 ETH, you're still well a ways away from $4,200 an ounce.
Yeah. And the fall, which you called out before. I mean, that a remarkable run.
Certainly seems
here a run as well, but definitely more consolidation and not remotely to the levels we saw 6 months ago.
No.
It sort of seems like the idea that the rising tide lifts all boats in crypto is out the window as the asset class matures. I suppose that's good news, but because it tells you the market is getting deeper and more liquid and more differentiated, as opposed to just blindly hodling everything. But
blindly hodling on a long enough timeline has worked out, Ilya.
It has, and
I think it's 2 years now. I think if you hold Bitcoin for a minimum of 2 years, at any point in time, you've been guaranteed to make money.
Completes the cycle.
Yeah, I mean, I maintain that digital tulips will eventually turn out to be as such. And by the way, I'm quite bullish on the technology. I just don't see any reason to be bullish on the token itself.
I know you like the ideas of cars. You don't like the Model T.
Yeah. I think the grand application here is CBDCs, and
which Trump spoke about favorably today.
Yes,
by the way,
yes, and that will be the great triumph of crypto. I think it's a disruptor to the banks and the credit card companies and other kind of payment infrastructure names, not so much to currencies.
That was mentioned that the U.S. needs to beat China in the realm of digital currencies moving forward. And that when they say the U.S. needs to beat China, this isn't like our American private companies need to beat the private Chinese companies. It's the United States government needs to have control over the digital asset space before the Chinese government gains that leverage and control over the digital asset space. So
unconditional surrender.
Parentheses.
Speaking of unconditional surrender, we have done a pretty darn good job not getting too far in Israel, Iran here today. But it is worth mentioning because this is the big elephant in the room here for the next, we'll call it 25 hours and 2 minutes until the futures market opens tomorrow.
Yeah.
95.5 IVR. We gap open higher. We close a little bit lower from the open, but we are still above yesterday's closing level. We are well off the lows, in part because Trump said that he was getting calls from Iran to come to visit the White House to negotiate, which the Iranian consulate for the UN came out and said that they will never grovel at the gates of the White House. And there was a whole bunch more, but I think that first sentence really captures the mood.
Yeah.
So for the sake of timing here, are there negotiators in Oman right now? Perhaps. We did have a news headline earlier today that Iranian negotiators are heading to Geneva to meet with European counterparts on Friday this week. So signs of off-ramps persisting, they still exist. If the bombs don't go off tomorrow, you probably see a little bit of a vol crush. Once the market opens up, people are relaxed. They can unload their positions that they held as a hedge. And then we get to a Friday where, all things considered, if there was no volume today with the FOMC ahead of a holiday, of expiration OPEX around the corner. Friday might be a pretty dead day too. So position management, maintenance, that's the plan.
Spot FX still open tomorrow too, though. So if you're looking to monitor something,
is where I wanted to end here, Glenn, which is perfect for having you on, because spot FX markets, unlike even the currency futures, they will remain open. And so you can look to things like dollar yen or Aussie yen or the euro to kind of interpolate how equities or bonds may be behaving, broadly speaking. Because if Japanese yields are up, but the dollar yen rate's trading higher, then what does that mean about U.S. treasuries in the futures market? They're probably going to open up weaker, higher yields, right? In any event, watch the market open tomorrow, 6 p.m. Eastern, 5 Central, of course. I'll be back later today for The Price of Truth with Victor in about an hour's time. Ilya will be back right after this for Macro Money, so stick around. I want to thank Glenn Freiberger for coming back on again here, joining us in Overtime.
Thank you, guys.
We'll see you again soon. So for Glenn and Ilya, I've been Chris. Good luck trading. Catch you on the other side of a quick break. You're watching Tasty Live.
Well, the Fed has come and gone, and doesn't look like we're very much wiser for it. No major changes here as expected, not only for the Fed's overall stance on policy, that was very widely expected to turn up a goose egg, but the situation for the forecasting that the Fed offered pretty much as you might suspect, and as we discussed on the show here yesterday. But some interesting things showing up in the expectations, and of course a very interesting path forward now that this is out of the way. This is Macro Money. I'm Ilya Spivak, head of Global Macro here on Tasty Live. And we are going to go through all of this here, taking a look at what the Fed did, how that fits into the overall story for investors here, and what is on the menu next. So first, just to look at how the day finishes here for financial markets. It is quiet, to say the least. Stocks ultimately go nowhere, neither do rates. The situation for gold is a little bit spicier. It is a little bit lower here alongside crude oil, so perhaps a little bit of a moderating geopolitical take here emerging in markets. But the dollar, steady. Even Bitcoin hasn't gone very far. So the situation fairly stayed. Now, of course, we do have a U.S. market holiday tomorrow, and the closure of the futures markets here is through a 24-hour period, basically, from here until things reopen in the PM, Thursday U.S., Friday AM in GMT terms after the holiday. But of course, global markets remain open. So we'll see what happens here in the wake of this Fed announcement for how it is onboarded in Asia Pacific markets, and then, of course, in Europe. That's not necessarily going to move U.S. assets because they will be closed, but currency markets will be on the move. So perhaps we'll get a sense from the likes of the euro and the yen what all of it might still mean. Looking at the statement from the Fed, very little has changed here. But what is interesting is this little bit in the second paragraph where it says uncertainty about the economic outlook has diminished but remains elevated. Anybody that might look at the S&P 500 since the lows of Liberation Day in early April might agree that indeed uncertainty has diminished. In fact, we see that show up in survey data as well. The PMIs have slightly improved. The story in consumer confidence, as we noted yesterday, has very clearly improved looking at the latest University of Michigan numbers. So indeed, worries about the uncertain economic outlook have somewhat eased, but the overall uncertainty still remains and still is significant. So very much in line with what the Fed has outlined here. What's interesting is also that they strike the bit about risks of higher unemployment and higher inflation rising, suggesting that that is a backward-looking statement as of May. But of course, when you look at the summary of economic projections here from the Fed, you do see that sort of a tilt. And of course, as we discussed yesterday, we anticipated as much, because in May, the Fed said exactly this, that it has now taken out. And so you have from March, the adjustment in projections giving you lower economic growth from 1.7 to 1.4 for this year, from 1.8 to 1.6. Next year, we can see right alongside that unemployment marked up versus March, and inflation marked up as well. So this seems to suggest that things haven't become worse in the Fed's thinking between May and June, but they have become more so concerning between March and June. Because, of course, in May, there was no update of the summary of economic projections here. So for inflation, higher inflation across the board, across the entire 3-year view here, both headline and core. But perhaps the most interesting part of this story, the part that we didn't necessarily anticipate, because, of course, all of these changes were very clearly marked, if not necessarily in their magnitude, then certainly in their direction, in what the Fed has been saying, both in the policy statement in May as well as the minutes from that meeting that came out sometime later. This is a little bit different. What we see is that for 2026 and for 2027, the stock of rate cuts has significantly diminished. And what we now see is that while in March, we're still looking at 100 basis points between this year and next, and then further easing, another 25 basis point cut in 2027, we now see the timeline elongate. So we still get the 50 basis points this year from 4.4 to 3.9. But then for next year, it's 3.6, so one cut instead of two. And then you get to 3.4, one more cut in 2027. So you get to 3.4 as you were anticipating, but you get there later. Get there a year later, as a matter of fact. And so the Fed here is signaling that actually after this year, scope for rate cuts is diminished, not increased, which is certainly quite a bit different than what you find in the market's own expectations for what is likely going to occur here. And actually marks what is probably the most interesting sort of upshot from the Fed announcement here writ large. So you have here the path for this year, and not surprising, it hasn't really changed very much. We have standstill through July. You start to kind of flirt with the idea of a cut in September, October, and then another one in December, and that's how you see the markets basically lining up with that 50 basis point forecast that the Fed is giving us. But when you consider what's going on for next year, the easing is actually expected to get more intense, not less. So whereas the markets are now at 100 basis points, the Fed has gone down to 75 over this same time period. And this now makes for a very interesting dichotomy. Because if the market is in fact going to say that, look, the Fed is worried about all of this uncertainty, they're worried that the cutting of rates now would be premature in the event that tariffs, as they work their way into inflation, do end up inflationary, and growth is impacted negatively, and through all that, the Fed has competing objectives, so it doesn't want to jump the gun. It really wants to make sure it's doing the right thing and focusing in the right area of the economy, whether it's focusing on inflation or focusing on growth, and justifying the standstill by saying, well, look, inflation is 2.4%, looking at the latest CPI numbers, and the unemployment rate is at 4.2%, which by historical standards is very low. So inflation is within a hair of target. Unemployment is very healthy, historically speaking. And so why would the Fed want to try to reconcile what the tariffs are going to do before they have evidence? Why would they guess? What is the impetus for them to do that? Why not just say thank you for the relatively well-positioned economy, and as they have, invoke that you have the benefit of time to wait for things to really tell you which way to jump without a need to rush it? Well, the markets don't have that ambiguity. They don't share that kind of confusion. They actually seem to have decided that they know which side of the coin this is going to land. And we've talked about this before, but we'll bring it up here again. This is the look at inflation expectations baked into the bond market, which we can see from mid-February were falling with stocks as the rollout of the White House's tariff efforts stoked concerns about economic growth and those efforts' consequences, negative as the markets judge them to be. And you see that come April, when you get that kind of back and forth, you get Liberation Day, and then shortly thereafter, a 90-day pause on its worst, most economically damaging aspects. You get a very rapid recovery in sentiment. This is, of course, that diminishing uncertainty that the Fed is talking about. This is the S&P, and it's going higher here very clearly. But inflation expectations don't follow suit. They diverge. They are saying that having fallen here, this is the place to be. And that, of course, suggests that there isn't a great inflation scare downwind, and that the markets are much more concerned with the growth implications of what's going on and expect those implications to be more powerful than any read-through into inflation, because the demand destruction from the slowdown that the markets are envisioning will overwhelm inflationary forces from higher tariff rates and actually result in inflation being net lower. And that's the story that we've seen here really since mid-May, evolving after this larger move since the beginning of the year. So it's no surprise here that the markets are at 100 basis points, even as the Fed goes to 75. And so what this does is it opens up a very interesting sort of possibility for a revaluation in markets where they become convinced that the Fed is behind the curve and move forward with pricing out more aggressive rate cuts downwind, expecting the Fed is going to have to play catch-up. A similar outcome last year gave us a dramatic rally in the bonds from April into September, and a parallel sell-off in the dollar, too. Now, beyond the Fed here, which was limited to this little bit in terms of its kind of practical deviation from expectations, we have a monetary policy announcement coming up from the Bank of England. No changes expected here. We can see rates seen steady in June, but the markets do anticipate that the bias will remain dovish. You can see here there's still 44 basis points on the menu for rate cuts this year, and another 27 basis points next year. So the markets are very much still looking for the Bank of England to be cutting. In fact, you can see here when you have a cut on the menu somewhere by September, and then a further one in December. So if we take a look at the pricing here, it's not impossible that we may go as soon as August, but certainly by September. And so that's really the market moving component here. We just had UK CPI data. It came in a little bit from the 15-month high, largely as expected. And if we look at the breakdown, a nice swing lower in transport inflation, most things still stuck in this energy component. But as we have talked about before, this is mainly a change in vehicle excise taxes, not necessarily a lasting sort of thing. This is more a function of policy, not of economic dynamics. Probably the biggest bit there is food and the increase there. But of course, that move really is outside the purview of what the Bank of England has agency over. It can't mandate global food prices or energy prices. And what it's dealing with then is seemingly the kind of thing where they have mostly a fiscal policy shock and just need time to work through that shock, filtering out of the data. That likely is how you end up with the dovish perspective in markets, because, of course, the growth story in the UK is pointing toward deceleration basically since the middle of last year. Things have perked up just a little bit here in May, but the economy is basically at standstill when you look at it in these S&P Global PMI terms. As ever, of course, these numbers are centered around 50, which is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And at 50.3, you're essentially idling, with manufacturing in contraction mode and services growing by a hair. And the trend, as we can see here, has been toward increasingly slower economic activity growth. So with that in mind, that dovish bias at the Bank of England seems to make sense, even as they pause this time. So the key risk then becomes that the Bank of England decides that actually, with the surging cost of oil around conflict in the Middle East and all manner of other potential influences here, the bias might be less dovish than market pricing suggests. That maybe they have less room to think about rate cuts for the rest of this year and maybe next. And so if that's the case, if the Bank of England seems to sound a little bit less dovish, if the voting tally is a little bit more hawkish of a hold than what's anticipated, so the markets are looking for a 7-2 vote on the 9-member Monetary Policy Committee in favor of a hold. If it's, let's say, 8-1, where only one person calls for a cut rather than two, that would clash with market expectations. And against that backdrop, the British pound could have itself a little bit of an upside run. Most other markets, of course, closed, so not much to see outside of spot currency markets and, of course, local European equities. But in this environment, it's really spot British pound where you'd see kind of the meat of the impact of something like this. And then looking ahead, because we don't really have much in the way of event risk beyond that this week, first thing next week, as we come back from whatever diminishing volumes after the holiday, we get S&P Global PMI data for June, the first look there. And immediately you get a sense of a familiar divergence. So the composite index taking in both services and manufacturing for Japan, expected at standstill, just a hair above 50. For the Eurozone, standstill, just a hair above 50. For the UK, standstill, just a hair above 50. For the US, clearly stronger growth. And so once again, you have this resumption of a world where it's the US or bust as far as global economic growth is concerned. We, of course, pointed out repeatedly that global growth is basically made up and is basically driven by three major economies: the US, the Eurozone, and China, with the US being the biggest piece. The rest of the world, the remaining 42% outside of the 58% made up of the big three, they're mainly vendors to those big three and depend on their demand to have demand of their own. So it's really those big three setting the course of where things go. And if we look at what that's meant, it is been a slowdown in global growth, really going back to the middle of last year. These are global PMI numbers here, and there's 50. So we can see manufacturing is back in contraction mode, where it's been flirting for quite a while. But the overall story here, the composite index in the blue line here, it's been steadily decelerating now for almost a year. And so we're at this point here where in May there was a little bit of a pop, but off a 17-month low here. So the story is of weakening overall, and the disparity, the duality of what the expectations suggest has really been how that's occurred. So we can see here the U.S. economy over that same period has been relatively strong, but the other drivers, both China and the Eurozone, have stagnated toward standstill at best, and in the case of the Eurozone, a mild recession at the end of last year and going into this one. But both are now basically standing still. And the U.S. is outperforming again after diverging down here, but that may not continue. And if it doesn't, then there's really a single point of failure here. There is no safety net. If the U.S. slows, then so does the global economy, and then global recession risk returns, which makes these PMI numbers early next week very interesting indeed, because as it happens, U.S. economic data has increasingly disappointed relative to expectations over the past 4 weeks or so. We can see that the City Economic Surprise Index here, the global one, is being pulled lower. The G10 one is being pulled lower. Meanwhile, the Eurozone's data is steady. And of course, in emerging markets, things are steady also. So the pull down here on the global and on the G10 readings clearly seem to be coming from weakness in the US. If that is going to foreshadow a disappointment on these PMI numbers, then global recession worries may well return in spades, even as the Fed gets an ever widening wedge between its view and the markets, where the markets are more dovish and the Fed is less so. Not exactly the most encouraging setup for risk-taking and stock markets, of course, if this plays out as it might. That is macro money for today. As ever, we are here Monday through Thursday, taking, of course, the holiday off here on Thursday with markets closed. So this will be our last show for this week, back to our regular schedule next week. And back on Futures Power Hour Mondays and Fridays, back with Victor Jones for The Price of Truth on Tuesdays, on with Tom and Victor for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
It's Wednesday, June 19th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live, the evening show, a little podcast, give it a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And we're getting our money's worth today. More on that in just a bit. But first, let's introduce our wacky Wednesday guest. We've got the one, the only Chris Vecchio. Chris, how you doing, my friend?
Open the markets. Why are we having a holiday on Thursday? I know it's an important holiday, but come on. Open the markets.
How is this going to work? How's this work again? I forgot how it did. We shut down. Futures shut down after 5. And
supposedly.
Then what happens? Or futures
tomorrow.
Are open, but cash is closed. Do you know
something
the logistics?
Yeah, I was looking at the CME Group website today, and you know, Victor, I guess we're going to be watching some things tonight.
Yeah, I don't know if I'm looking at it. Sometimes I get caught, and I'm like, I don't know if I'm looking at a live price or if these things haven't moved in 12 hours. I'm not exactly sure. And I've just been checking my phone for no reason. Shout out to everybody watching. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. If you don't already have both, you should go get them. Make your life just a little bit better. But there's only one place if you want to be part of the conversation. Bing, in the middle of your screen. Did we get it? Did we get it? There's only one place to do that. That's on the evil Google YouTube. So head on over to Tasty Live's YouTube channel. Subscribe to the channel, and all of your thoughts will be streamed on screen, both appropriate and otherwise. Chris Vecchio.
So just, Victor, before we start.
Sure.
Futures market, regular open, trading halt at 12, resuming at 5 Central Time. So we have some things to watch tonight. Tomorrow, cash is closed, half day for futures-ish. Not half day, most of the day. But the market's effectively closed.
Yeah, that's always a weird one. When you get the half day and then you open up back at night. So weird. I mean, I don't
kind of like a Sunday. Listen, I think the market we should have 24/7 trading. That's what I think. But
we should. And the only reason we don't is because they haven't figured out how to monetize it on each and every individual trade. SPX down 3 basis points, NASDAQ down nothing. The Dow Jones down 10 basis points, and the Russell, the little engine that could, up 0.5%. Vol got crushed a bit today, I suppose, if I could say it, down $1.50, but still above 20. Fixed futures still at 20.5. Chris Vecchio, what say you, man? Still hanging around 60.33.
You know, I took off Thursday, Friday last week. And when I left work, the S&P was like, 6,000, 60.50. And I came back on Monday and it was 6,000, 60.50. So I assume it was a pretty quiet few days, which is not atypical because running up into the Fed meeting, things are pretty quiet. And it's been a pretty quiet week, right? Everything's priced in. Isn't that what the market's telling us? So
it would have been, I think for most people, it would have been better to just fall asleep and come back a couple of days later.
That's not what I did. No, I unfortunately, I'm one of those meme people, Victor. When you see those, memes of folks who are monitoring the situation, Trung Phane had a good one out today. It was like, this is what someone's eyes will look like who's drinking alcohol and different drugs, and it goes all the way down, monitoring the situation, and their eyes are just bloodshot red. But that actually overlaps very neatly with my natural sleep cycle. So the fact that I'm up watching my Mets get their teeth kicked in for a 4th straight game. I went to 2 of those games they lost, and this is their longest losing streak of the season. So is it my fault? Maybe. But I would point out that this is very interesting from a market perspective. We can talk about the philosophical and the human reality of this, which is obviously terrible. But the fact that oil vol is so high and oil has exploded to the upside in such a significant manner, way more than it did in the April or October 2024 episodes of the missile salvos being exchanged between Israel and Iran, yet stocks are reacting the least concerned throughout this entire episode. April was the biggest drawdown. It took us a month to return to where we were before the Israel-Iran tensions. October was like 6 days. We took one trading session, right? We're down Friday. Monday, we basically get back to where we were on Wednesday's close before I went on my little 2-day trip away. stocks just don't care about this. Maybe it's because, for what it's worth, the earnings profile of our business with Iran for S&P 500 companies is pretty low. Nil, in fact. Also, are we going to really see global oil supplies disrupted? Is that a problem for the U.S. this time around, Victor? 10 years ago, U.S. and Western Europe were right, and that's a huge part of the equation here. Iran threatening to close off the Strait of Hormuz mattered 10 or 15 years ago because Western Europe and the United States were the biggest purchasers of Iranian oil. And these days, Iranian oil basically goes to one place, China. So shut down the Strait of Hormuz, you're hurting China. China doesn't want to see it shut down. So Iran's not going to sabotage the Strait of Hormuz anytime soon. It doesn't impact the people who are waging this war against them. I think this is a very interesting exercise in seeing whether or not the macro matters. Supply chain disruptions are obviously the thing that we're keeping our eye on, because an immense amount of natural gas fuel moves its way through the Strait of Hormuz and then ultimately into the Persian Gulf. But right now, it's a good story. In terms of market impact outside of oil, you would not know it's occurring whatsoever.
Some part of me wonders if we just have to get to the other side of expiration here, because either people got so burned in April, like they're so out of position, they're so jockeying for performance into this end of the month, end of the quarter. Either that's what's happening here, or none of this. I can't imagine none of this matters. Like, I looked at the S&P and I'm like, bro, they are screaming at you what they think is coming. And I think if you believe them, see, the problem with the Federal Reserve is, like, they've said so much shit that's been so far off that, like, when they start to put SEPs in front of you that effectively say growth is slowing, we can't maintain inflation's it's out of control, and our Fed funds rate is going to be meaningless to do anything about it for a few years. How do you not flinch at that? And I get that 40 points is a move. We did move 40 points, first up and then down, but there's an accumulation of negative news here, and I just don't understand it, Chris. I don't understand the price action yet.
It's just another brick in the wall of worry, Mr. Jones. And that's what a good bull market needs. Right? Look at the VIX term structure over the past 2 weeks, from June 4th to today. The spread between the front month and the back month contracts, 6 points or so, and now we're sitting closer to 3. So it's not like you've seen a big bump in vol. Right? It's just that the curve is flattened out. Collectively, the market has been telling us that the past 2 weeks is basically digestion, and we're handling this geopolitical risk fairly well, all things considered. Right? You're not seeing gold shoot up to 3,800 and stocks dump 10%, and just an immense amount of volatility in treasuries, but no real direction because, hey, is it growth going down or inflation going up or safe haven demand right? This has been exceptionally orderly. There was a part of me last week when I woke up to the news because Thursday morning is my daughter's graduation. And I say, oh my God, I can't believe I'm taking off of work today. But what a good day, right? Like, or 2 weeks ago for Elon Musk and Trump. And then last week, like I'm out Thursday, Friday for just my vacation. It's like, oh my gosh, I'm missing this again. And yet the prudent thing to do on the other side of it was just to ignore it. In both occasions, if you didn't get panicked at a Tesla or you just bought the dip and said it was nonsense, you were fine. If you bought the dip in equities after the news broke, you were fine. I don't know that the lesson here is that nothing matters. And I know a lot of people want to take the nihilistic path and say, well, World War III is coming and stocks are still rallying. One, if you ever see a scare in the market because of World War III, you must buy the dip. It's like a Pascal's wager kind of thing, right? You know Pascal's wager, Victor, the mathematician. Why do you believe in God? Right? You do your little pundit square, right? You believe in God and there's heaven. Well, a lifetime of eternity in heaven. If you believe in God and there's no heaven, then you just spend an hour or two a week praying, going to church, whatever. If you don't believe in God and there's a heaven, it's a lifetime in hell. So like the reasoning works out that you should roll the dice and be a religious person. And I don't want to say it's like kind of the same thing here, but kind of seems like it's a Pascal's wager situation. So you were talking about the Fed, though, and with respect to the Federal Reserve, They could have just thrown up their hands, given us one of those emojis today.
It's the same thing as last one. It's so embarrassing.
It's more so than last one, right? They tell us in their policy statement that, you know, the negative impact of growth isn't necessarily there, and uncertainty around growth has declined since the last meeting. But then when they give you these forecasts, everything is getting hit, and then the expectation bands are widening out.
Yeah.
Powell said twice today, at least, that that no FOMC member is tied to their rate path. You know, these aren't even strong convictions held loosely. These are weak convictions held loosely right now. So all of this can change on a dime. You get a few more, you know, you see further labor market deterioration, a few more inflation reports miss. Powell probably is going to act, but it could really go one way or the other right now.
Yeah, I feel like we're at the wrong price. You know, some part of me thinks like elevated vol right now, 2021, at this 60-30 makes sense because it's not the right price. But you know, we should be a ways away from here. But I too can't figure out. Do you unclench to the upside and this is a funny money 7,000 market, or do we unclench to the downside and go retest like 5,200 and things are still real and we still got a chance? The world's not. We're not going to live in some Terminator hell. All right, so outside the E-mini
we
S&P,
will, just not this week.
What do you make of the Russell outperforming? Is it like, I keep making fun of this trade because you'll get like, I say Russell's here for a good time, not a long time. Every time it outperforms, maybe you get, at best, you get a 3 to 5 day streak, and then it falls apart. Is there ever going to be a time when you can bet value over growth, or do you just keep buying 1 to 2% dips in the Mag 7s?
Mag 7's a real credit trade. We've referenced this on air the past few days, but Bank of America Fund Manager Survey came out. Top 3 credit trades right now: long gold, long Mag 7, short US dollar. Okay. Incidentally, 4 of the 7 Mag 7 names are not green year to date. So it's a crowded trade, but it feels like it's legacy crowded trade. A lot of people have just been holding on because the past 2 years, what was the best? Right?
Maybe.
Mag 7.
They just gave you a 35% discount over scaries, though. So even though it feels like we haven't moved that much on few of these, in the last 2 months, these things have like given you 40%. The biggest names in the market gave you like a 30 to 40% return just to get back to unched.
Just to get back to unched, right? So, but I feel like it's people riding it out because if you look at the Fund Manager Survey, it's been in favor around the same levels as the past several months. So regardless, though, could there be some catch up? 4 of the 7 names are down. Sure, that's certainly possible. Is it crowded, though? Yeah, it is crowded. But you say that this could be a funny money market. Why wouldn't it be? Haven't we seen that movie before, Victor, where you get past OPEX in June, you go through your little window of corporates being suspended, and then all of a sudden you enter that sharp seasonality window at the beginning of July where the first half of the month you just go crazy for some reason. And then ultimately August is choppy, September, October you fall off, and then face ripper into the end of the year. We're kind of setting up for that again, it feels like. And so that's how I plan on trading this market, where right now there's still a week and a half left in the quarter. We have half a day tomorrow, we'll call it, but Friday next week and then Monday, June 30th. People are still in the hole after missing the market rebound in April when we look at positioning. And so I still think there's an incentive to chase short term. And you can probably get a squeeze. I think you could get a squeeze up here over the next few weeks, absent World War III starting. Although China and, what's the linchpin for World War III arguments around Israel and the U.S. attacking Iran? That Russia is going to come in and provide support, and China has their own interests, so they're going to provide support. There is no indication that China or Russia are coming in to save the Ayatollah's neck. At all. Right? Putin has said publicly, we cannot help you. They have their own war going on. They're sending mules to the front line in Ukraine. Do you think that Russia has personnel or armament to spare for Iran? Come on. So if there is regime change, we have to talk about the tailors of that. I'm curious if you had a chance to listen to the Tucker Ted Cruz interview yet.
No, I just saw the clip you sent me, which I was my mouth fell open. What a brilliant, like, you know what? Here's the thing. I just sat down before you. It was so well timed that you sent this to me. Maybe hours before you sent that to me, I was talking about the escalation with my wife, and our son overheard. And I said, okay, I'm going to explain a few things to him. And I explained war. And then I got to this point where I had to explain bomb. And I was like, should I do this? You know, our son's only 5 years old. I was like, all right, I'm going to try it here. Try it this way. And I explained the word bomb, and he asked a follow-up question. And my wife was like, okay, that's enough. The point is, in this discussion, he asked me, how many people are in Israel? And I said, 9 million. He goes, how many people are in Iran? I said, 92 million. Then he asked, how big are the countries, you know, like the landmass? So I explained to him. So the wildest thing is that when you sent me this clip of Tucker Carlson and Ted Cruz having this conversation, is my 5-year-old son could have told you how many people were in Iran. My 5-year-old son could have told you at that moment, which is ironic. A U.S. senator is completely unable to do so while hawking the same things we were hawking early 2000s.
Are you going to make me defend Ted Cruz here? Okay, so it's April 2013. I'm doing a segment with Fox News and Tucker's producing team about Bitcoin.
But he's...
Hold on.
Okay.
This is about the production, okay? You and I have done enough media over the years where you know that when you do stuff with TV and you know, radio, okay, it could be CNBC, NPR, Bloomberg, even Fox Business, quite frankly, most of the time you go back and forth with the producers to get a set of questions, right? So that way when you go on air, there's no gotcha moments. That's not, if you're doing business television, it's not really like that. It's not a comedy show. So you want to be able to have that guest convey the information correctly. So they inform the viewers, give the viewers a reason to tune back in. When I did that segment with Tucker's team at the time, I recall them asking general outlines. And then when we actually sat down to do the interview, the questions were a lot more incisive. And they weren't like gotcha questions, but they were like, oh, this is really specific. I wish we had talked about this beforehand, because I would have specifically got into this piece of legislation as opposed to saying like what's going on in Capitol Hill. Right. And so to me, it feels like Ted Cruz's team and Ted Cruz was told like, hey, you're going to talk about Iran, why we're getting into the war, you know, just for the audience. And so he obviously doesn't do a lot of prep. He's going to talk about like big philosophical things. And Tucker's like, yeah, what's the specific religious sect of the Shia population in Iran? And it's like, this isn't Jeopardy, man. You know, so there's a balancing act between the two, but I do agree with the view. Like if you're going to go after a country, if I'm going to talk about a country's monetary policy, I want to know their GDP. I want to know their labor market situation, workforce employment, inflation outlook, you know, what the demographics look like. And so then at that point, you kind of know about so you would think a U.S. senator would know, hey, we're trying to topple a regime here. What kind of people live there? How many people live there? Probably should be something you should ask.
Okay. I suppose the way I think about it, and the reason I think my mouth fell open on that clip is because if we, you know, when we go on family vacations, you know, I ain't had much learning, but that's one of the first things that I do is I sit down and I go, where are we going? What's the population? How far away from the equator are we? Like very simple, interesting facts about the place that I'm going. And we all kind of do that as a family. So the lack of intellectual curiosity, if we're invading a country, bro, and I'm a U.S. senator, that's like 101. I don't expect you to need to sit down and do the prep for a Tucker interview where you had to look over the population of the place that we are mulling over going to war with. And I think the follow-up question, which was sort of like the religious makeup of the country, was, okay, you don't know this, and you're pretending like it was a guy. Yeah, what do you know? What about this? Yeah. It was sort of a throw-out question. So me, I look at that and I go, I don't think you should have had to do a bunch of prep for that level of question. I think that should be like top of mind information. I mean, the potential of going to war with Iran has been floated for a very long time, and the population hasn't changed. So the fact that you don't know that after how many decades in Washington, that's crazy. It is crazy, Chris. It's crazy town.
It is, yes.
What do you do with it? Is there anything, I guess, outside of the Mag 7? Is there anything that you do like?
Victor,
like
let's
themes?
just be clear here. Hold on, let's be clear here. If Ted Cruz, Harvard educated attorney from the great state of Texas, if he doesn't have his hands around this issue, I have very low confidence in Donald Trump having a strong grasp on this issue either. And then so like the knock-on effects of we're just going to bomb the hell out of this place and like we're not going to deal with boots on the ground and regime change. I know that's not what they want, but also what happens there. China has a vested interest in making sure those ports stay open. The regime falls. Do we think that we're just going to roll in there, or China might come in and say, you know what, we'll help with the regime change? The wars are not linear. It's like recessions. Recessions are not linear, right? I cannot possibly predict how this is going to unfold next. So it's best not to go to war.
I agree with that. And I feel like it's some part of me so drained mentally on this issue in particular because...
Well, have you tried adrenochrome? That helps.
It's been floated for a long time, Matt. We were just looking for the pretense. We're just looking for the pretense for war with Iran, and it feels like we found it, and it feels like there wasn't an option on the ballot to not get ourselves into a new war. And
that's the funniest thing about this.
Yeah, go ahead.
Who convinced Trump to rip up the Iran nuclear deal? The neocons. Who left the Republican Party to become never-Trumpers? The neocons. Who is giving the neocons exactly what they've been yearning for since the late 1980s? I mean, didn't we arm Iraq to fight against Iran after the Shah fell?
Mm-hmm.
So this has been something in our minds since 1979, perhaps. And the neocons have been pining for this for my entire life, your entire life. And Trump's going to be the person to give it to them, even though they've worked the hardest to make sure the Republican Party wasn't united behind him. It's fascinating.
No, sickening. It's sickening, bro. Do you think we're in this? I asked Ilya the same question. Like the whole peace through strength promise of the current administration, it becomes really hard without credible deterrence. And I think you sort of made this tongue-in-cheek joke one time when President Trump responded to Putin with that tweet. Stop, Vladimir. It's like, bro, that is not credible deterrence.
Yeah.
So some part of me wonders.
This is credible deterrence. We've moved 2 dozen Stratotankers, which are our major refueling planes.
That's my point.
Into the region. Right. Yeah.
This is the thing that you have to use as your credible deterrence.
This is the red line that I wanted. This is when President Obama said, this is a red line for me. This is what you do to back up the red line. You move a carrier strike group into the region. You move a third carrier strike group into the region. Wasn't it crazy a few weeks ago when I said, how come we're moving all these B-52s, these B-2s out to Diego Garcia in the middle of the Indian Ocean? Remember that? It's a staging ground for when you attack things in the Middle East. And sure enough, the dots were there, right? It was kind of like those blood tents that Russia was setting up on the Ukraine front line for their drills in December 2021 and January 2022. If they're drills, why are you setting up hospital tents with all this blood being transported to the front line? What? So the breadcrumbs are out there for people to follow. This is if this is a peace through strength, escalate to de-escalate, this is the most credible way that you could do it, because otherwise saying like, hey, if you do this, we're going to come get you. Okay. You keep saying that to me. Okay. But now we've moved all these assets into the region. So maybe it's just a bluff, but the